Good morning, traders, and welcome back to BluSky Trading Live. This pre-market guided audio with me, Coach Becky, is here to help direct your conscious and subconscious thoughts to actively experiencing in your mind's eye your most successful trading session. I encourage you to hop on here live with me daily before you trade with a focused, calm intention. I know mornings are busy, but trust me and the science here, because slowing down and focusing now for 15 minutes will help set us all up for the best trading session. These visualizations I'm about to walk us through are designed to train your brain, what it looks like and feels like to perform at your optimal level, follow your prepared system, and trade as you ultimately desire to each day. Please do follow with me with regulating your breathing with purposeful, deep, centered breaths. And if it feels right for you, close your eyes now as you listen. I will lead us through a successful trading day with a focus on your daily habits, mindset, trading system, and personal objectives that lead to a high-performance analysis and execution. Visualize yourself with a strong, steady, focused mindset to behave as you intend during your trading session, to train your subconscious that you are fully capable of achieving your greatest goals. I do it, and I'm so grateful for these sessions every time I make time for them. So thanks for being here with me. Let's get into it. My body wakes ready as I've given myself the sleep and restoration needed to perform at a high level. Before I start considering my charts, my mind prioritizes gratitude. I give thanks for this new trading day. I give thanks for my safety, stability, and opportunity. I give thanks for my health, my mind, and my ability to participate in these markets. I give thanks for the responsibility I carry as a trader and for the discipline I continue building. I give thanks for everything aligning for me and through me. I set my intention for this session. I visualize myself moving calmly and purposefully through every step of my morning routine. I see myself prepared, grounded, emotionally steady before the futures market opens. I visualize potential setbacks, volatility spikes, fakeouts, delayed entries, and unexpected movement. I am not fearful though. I adapt. I stay flexible and fluid when I trade. I remain emotionally neutral and focused regardless of what the market delivers. I am fully prepared to step into the arena today. My mind is clear, optimistic, and alert. I am excited to see how my futures market has developed overnight. The story has, of course, continued unfolding while I rested and reset. With my trading space prepared and optimized, I sit down at my desk and log into my platform. The glow of my screens feels familiar. This is my workspace. This is my business. Trading is my craft. I begin gathering the most current information and context. I review overnight highs and lows, key levels, economic data, liquidity zones, areas where participants may become trapped or emotional. Every trading day tells a new story. I approach this session with curiosity and an open mind. I carefully observe where price is trading from the larger time frames all the way down to my execution chart. I have an entire toolbox available to help me study and interpret this market. I have experience. I have emotional control. I have the ability to participate safely and skillfully without fear. Many hours of screen time, practice, setbacks, and repetition have prepared me for this moment. Months and years I have put effort into my craft. I'm ready. I adjust my charts and finalize my trade plan. I define my key levels. I define my risk. I define exactly what conditions must be present before I participate. I have already done the work required to perform well today. This is what showing up for myself looks like. As we move closer to the opening bell, I continue priming my mind. Today, I choose patience over impulse. I choose discipline over emotion. I choose execution over hesitation. I choose consistency over excitement. I choose progress over perfection. I am calm. I am prepared. I am ready. Let's go. The opening bell arrives. My session is live. Volume begins to flow into the market. The morning is still young, quiet beneath the growing energy of traders around the world stepping into action. Deep breath now. The smell of coffee sharpens my focus. I settle back into my chair and I watch the first candles beginning to print. I enjoy observing the opening energy take shape. There is no rush, no pressure, no need to force anything. I mentally review what my ideal setup looks like. I already know the type of trade I am willing to take. I know my position size. I know my acceptable risk. I know how I intend to manage the trade if my setup appears. The soft hum of my computer and the glow of my monitors create the backdrop for my work. I calmly cycle through my charts and data as they expand. The excitement I feel is controlled and measured. I'm not here to gamble. I am here to execute. Relaxing my shoulder and jaw, I take a slow, deep breath. I feel centered, focused, present. Even as the volatility begins to increase, my breathing remains steady. I have the patience to wait for true opportunity. I do not chase. I do not react emotionally. I scan for clues, for acceptance, for rejection, for confirmation. I continue observing how price behaves around my critical levels. I review my notes and remind myself exactly what conditions I planned to trade. I remain composed and intentional. I remind myself that my goal today is not to feel excitement. My goal is to make high-quality decisions. My behavior will honor my preparation. My actions will align with my... Suddenly, I notice one of my best setups beginning to develop. The market is moving into an area I anticipated. Price is interacting with my level. The order flow begins supporting my thesis. I feel connected to the rhythm of the market. I watch price stretch, pull back, respond. As consolidation develops around my planned entry area, I prepare myself calmly. I aim for an entry that aligns with my trade plan and allows for a clean, logical stop. No hesitation, no second guessing. With a calm confidence, I execute the trade exactly as planned. I set my target. I place my stop. The trade is now live. I trust my preparation because the work has already been done. Do I feel butterflies? A little, and that's okay. I welcome that feeling. It reminds me that I'm alive. I am participating, that I am willing to take calculated risk in pursuit of meaningful reward. At first, price rotates slightly around my entry, a little in profit, a little out. This is normal. Every trade involves uncertainty. My risk is already defined, so I do not overmanage the position. I continue scanning my live data and order flow. I stay objective. I'm trading information, not emotion. Price continues responding well. Momentum begins building. I instinctively recognize that my trade is proving itself. This is the opportunity I waited for. This is why my patience matters. As momentum increases and price pushes through an important area, I intentionally add to the position per my system. I stay composed. I stay disciplined. With skill and efficiency, I adjust my targets and manage the trade according to plan. Everything is unfolding as it should. I continue allowing the trade room to work. As profits build, I notice anxiety attempting to enter my mind. The quiet voice whispers, "Don't give it back. What if this reverses? Maybe you should exit now." I recognize this voice: scarcity, fear, emotional protection. I don't fight it. I simply observe it and return my focus to the data. My edge requires trust. My growth requires courage. My desire to succeed is stronger than my fear of losing. Almost instantly now, partial profits began filling. Good. I acknowledge the progress while remaining emotionally neutral. My work is not finished yet. I continue managing the remaining position with intention. I understand that markets naturally pause, rotate, and consolidate before continuing. I do not panic during healthy pullbacks. I stay aligned with the conditions in front of me. My data still supports the trade. My plan still supports the trade. There's nothing I need to force. I take a slow, deep breath. Take a brief step away from the screens. Freshen my water, freshen my coffee. When I return moments later, price is approaching my target. Within seconds, the remainder of my target order fills. I slowly
BluSky TV. I'm Justin here with Coach Becky. Mike is still out on business. He should be back in a couple days, but until then, we are going to hold the fort down. How are you doing this morning, Becky?
I am so good. I was so ready for the market. I'm not going to lie. I felt locked into my plan and my levels. And then 10 minutes ago, the bottom just fell out. So this is an interesting start to our Monday.
Yeah, so apparently, guys, the ceasefire, any peace talks are off again. And don't you love the timing? 15 minutes before market open, we're in the middle of, I should probably delete that, what I have written there, because that's not stream safe. But as you can see, I don't like this zone.
Yeah.
Because it's just a big old range, and I wanted to stay out of it. So all last night during the Globex Open, I kind of stayed out of it. We did break out. The market was incredibly choppy overnight. You're just looking at the 30-minute chart, and it was a straight barcode. So if you were up trading it and trading London, you probably did not have a good time. You're probably very annoyed with the market. So I'm glad I stayed away Sunday night, come in fresh on a Monday morning, and usually it's no news on Monday mornings, but we had some major news. So I am personally going to let this settle for a few minutes. I'm going to assume we pop back into this 360 to 500 range, kind of erase that news candle, and then we can probably look for a play. I know you had a pre-market plan, Becky, but what are you kind of seeing?
I did. We were falling into demand. And so for me, it was super choppy overnight, but we did break the highs overnight. And so that was, again, a bullish sign of continuation. but there was some trades in both directions. So I wanted to be kind of cautious, and I wanted to see if demand would hold essentially from Friday. And we were kind of sinking down right before the news hit. We were kind of right on top of a key support area from Friday. So if it was going to hold, I like the bulls. And then this really not great, geopolitical news came out, and that really is a sign of instability in that department, which is a big deal for the stock market. And so, of course, this fallout makes total sense now. But that does change my plan, because I was looking for longs in support, which for me was higher still at that point. And so now we have sunk lower. I still am on the camp of longs in demand. However, when the backdrop of that negative geopolitical news that it's unstable in Iran and the ceasefire is off is the gist of that. I want to be very, very cautious and see if buyers can hold in that backdrop, because right now we have sunken deeper into support, but now we're into the deep depths of the lows of Friday. And so I'm very cautious. I mean, I definitely don't want to short in the hole at this point after this fall. But I'm careful to long given the concerning news. And so I think we'll just have to ease into this day and see who can show some force once the market opens here.
Yeah, I'm looking at ES, and if 575 goes, it could get pretty bloody. The major news was, I guess, something with the Gaza situation. Let me exactly what it was. I was kind of getting my prep ready, and then Becky and I both said, "What the heck just happened?"
On NQ, I have 3040 as a really key level, and right now we are bouncing off of that this morning. So if that can hold, that's my support that I'm really eyeing on NQ, and then ES is around 580.
Yeah, that makes total sense. So the official news is Iran stops message exchange with the U.S. in protest against Zionist crimes. Halts talks with U.S. over Lebanon and Gaza ceasefire violations. There will be no talks until Iran's demands on cessation of Israel operations in Lebanon and Gaza are met. There's actually more since I last looked. Now the resistance front in Iran have set their agenda to completely block the Strait of Hormuz. So we are like back to where we were 3 months ago, I guess, Becky.
That does not sound stable at all.
Oh, yeah. Gotta love that. Negotiating tactics. Yeah, I need coffee. I agree. Everybody sit back, relax, take your coffee. The market's not going to go anywhere.
Yeah.
But we are sitting right at key support. So
we're at key support right now, which I'm very interested. And I mean, you're right. What you just said is that we're right back where we were 3 months ago. This saga that we're in is not a new situation. It's an unstable situation, but it basically means like the positive news is not here right now, but it's not crazy surprising either. So I don't think that has to take longs off the table necessarily, but we do need to see that they're going to hold and this drop is done.
Yeah. If we can reclaim where we dropped from, then it's just another news event to let everybody load up longs.
Yeah. I mean, NQ is pushing stronger than ES right now. They're both having a response at this demand despite that news. So that's very interesting to me.
Yeah, if we can push over about 460, 470, same levels we were kind of looking at on Friday, we should get the continuation. I'm just gonna go through the longer time frames and kind of see what buys we can get. I know this news candle is gonna throw it off, but
I know.
mean, it's hard not to be bullish, guys. Thursday dip, Friday dip. It's basically just creating buying wicks on every daily candle. So daily's very bullish in my opinion. Once we get under that, it starts to look a little squirrely. So I got eyes on this 450, 460 level. We came up, we tried to break through it. We're trying.
Yeah.
I don't want to rush into anything because I'm going to assume there's going to be headlines for the next 30 minutes. He said, she said headlines. But in a vacuum, if we're not looking at headlines, I am looking at the start of a small time frame little buy model. Kind of would be looking for about 360 longs. I'm not going to take it now, guys, just because I think it's risky. But that's the level I'm watching. Is ES kind of doing the same thing?
Yeah, they're both dancing around the same. NQ was stronger, but now they're both just hesitating because I think it's a lot to digest this morning. It was not anticipated to happen 15 minutes before market open. Of course, I mean, we don't anticipate this kind of thing. But
yeah, I'm gonna take a stab at it, guys. But I'm gonna size down pretty heavily just to be safe.
Yeah, I'm still on the camp of this is the area where I want to get long as well.
Yeah, so I'm gonna try 361 long. I'll know pretty fast if it's gonna work out or not. So just keep in mind there's a lot that's going on outside of the chart.
I would like to see if this 15-minute can close bullish, and then we can get a retracement and hold as part of it as well, given that there's kind of some craziness. There is news, a Forex calendar at 7 a.m. at 10 a.m. Eastern, manufacturing PMI, I think. There could be a little bit of a bounce there. I'll have that on your radar if you're in trade at 10 a.m. Yeah, exactly, Jet Dry. Yep. The 945 one is not too fancy, right? Yeah, it's part of the manufacturing PMI as well.
So we're pushing right into resistance now. Unfortunately, didn't get that fill. It's honestly not the worst thing. I don't mind kind of sitting on hands until the 10 o'clock news. Let the first 30-minute candle form.
Yeah, I would have been all over this buy if it wasn't the situation of like, makes me less comfortable.
If anybody does see any headlines, please let us know. I know some of you guys get the news quicker than we do.
ES is a little bit behind NQ. I wonder if she'll pop just as strong here. It's right around my key level on ES as well. Around, I mean, it held on that 580 level and it's pushing up. It's a little bit weaker.
I'm just going to keep this news up just to be safe. All right, so we got the push on NQ. Now I'm looking for bulls to hold the 400 area for the next push up to around 460. Going into actual economic news. So we'll see if that holds. I'm not going to do the 400 buy just because you guys saw when I had this zone label on my chart. You know why. I call it the BS zone. This is my F around and find out zone. So smart thing to do for me is to wait for either side to break. I was going to take a stab getting it at the bottom, trying to run the top, didn't get filled, but we got VWAP right above me, some resistance. So I'm going to kind of let this play out without me. Yeah.
I'm going to get in a little bit of ES long because we're slower here. We're down. We're a little lower into the support. So I got a small position on an ES long.
Yeah, if you can get above, I mean, let's just call it 600, you're set.
Yep. Yeah, 598, 600, all around in there. We're pushing at it.
And didn't quite tap 400, but 400 hold aggressively. So this is looking very, very bullish. At least on the short time frames, in my opinions. Would have been nice to catch that bottom, though. But, oh well. Yeah, news at 9:45 and 10, exactly. Yep. How's everybody out there doing? Everybody have a good weekend. Hope we're nice and refreshed, ready to kill the week. We have been on a hot streak since we started BluSky TV, Becky.
I know. It's been so fun. Like, I love this community and like talking it out in the morning and printing some money. It's fun.
Well, there's my TP for NQ. If you happen to get in longs, this is where I would be unloading most of my position for about 100 points. So good job if you front ran me.
But often there's retracements. So this is a good sign. What we're seeing right now is the bears are holding, or the bulls are holding. They held that demand area that we were eyeballing. And so that gives us good information that, yes, there was the news, but the market is going to do what it's going to do. And the news is not crazy surprising, honestly, at this point. I mean, it's an evolving situation, actually, it feels like. So now if we get this print that is strong and we get a retracement, we could get a really good entry here, I think.
Yeah, I mean, like we've been saying, guys, the market is pricing in good news and it's ignoring bad news at this point. So you're getting these knee-jerk reactions for bad news, and it's going right back to where the news happened. And, just trying to continue to build bullish momentum we've had for the last few months.
Yeah.
And the fact that basically the news said that the deal is dead and that's all we got, probably just going to be looking for longs all day again.
Yeah. I mean, the deal was never confirmed, and so they're still just, like, not there. Okay.
I'll tell you, it will be nice when this is all over and we can just actually trade without having the news up.
I know. Then what's it? But then what's it gonna be?
It'll be something else. There's always something, guys. Always something.
Oh my heavens!
The chip space is on an absolute tear, Breezy.
Yeah,
it's insane.
They're strong.
And remember, guys, if you have any friends that trade, once we get 100 people in here, we can start doing some giveaways, some sales, things like that. Make it real fun for everybody.
Yeah.
And we're slowly growing every day, so we'll get there soon.
Yeah, we want to celebrate the growth and bring people in, keep the chat going, share and grow. So much potential.
Right. So we pretty much hit my resistance, which was lines up with VWAP almost exactly. Running back to 400. I'm just waiting to see if we're going to stay in this like little range until the news drops, or if we're going to pick a side. To me, I'm still leaning upside.
Me too. I really like this look of like a strong bullish energy at open, because then we can join that direction here if we get a retest and a hold down around anywhere near where we hit the bottom this morning.
I'm going to keep this order open, guys, just to like have it open. It's just in case we get a pullback, but I'm not expecting it to get filled down here at 360. Good morning, Amaro. Hello, question mark.
What's up, Amaro? We're new.
I would expect a 400 tap.
Yeah.
We'll see. We'll see.
Morning, Blake.
This is a nice hold by the bulls so far.
Yeah, this looks good. Yeah. They're not being flushed here.
We do have some news in 3 minutes, guys. So if you are in a position, just be aware of that. Need to make 20K. Tell me where to going. Wait till after 10, and maybe we'll help you with that.
Don't we all need to make 20K?
Yeah, I think making 20K would be nice for me as well.
I'm into it. Yeah, I'm looking for to grow up a long position as we prove that these bulls can hold. Could be proven wrong, but we've already had a nice sink out, and then it sort of stabilized. And as long as nothing changes in that news department, again, let's like keep our ears to the ground on that. But I can see the bulls holding here, retesting the pre-market highs.
Yeah, literally wipe that whole candle out as soon as market opened.
Market man caught it.
So for me, everything up to the 15-minute looks bullish. 30-minute, I'm not sure yet. The 1 hour is just creating a ridiculous buying wick. And same with the 4 hour. So I have a feeling typically when we have these news candles, the 30-minute and the 1 hour news candles, that area, once we break either side, we get some really nice moves. So you want to mark on your charts for NQ 450 and 300. Either break of that side it's going to run. And obviously we're leading to the upside.
Yeah, same.
Up 2,100 done for the day. Oh, you caught the longs. Good job. Good job.
Yeah.
Don't you love a 12-minute workday?
Woo. I started getting a little ES position around what my fill's around 88 here.
Nice.
But still, I didn't join right away, and I need to see some hold here before I really make it a decent sized position. Hey, nice to see you, little market man. Thanks for hanging with us and catching a nice trade to start your day. Enjoy the rest of your day.
What was the 9:45 news? Was that the PMI or was that the 10 o'clock?
It's preliminary at 9:45, but 10 is the main one from what I can see.
Gotcha. So 30 seconds, we're going to have maybe some volatility, but probably nothing crazy. 10 o'clock, we might get something, but this is a bullish setup.
Yep, agreed. That's what I'm seeing. Which I backtested the first 15-minute candle quite a bit, and because I think there's a strategy there. And oftentimes, if it will print a directional energy, especially out of like if it's bullish out of demand or if it's bearish out of resistance, then hopefully it will. And generally, more than it doesn't, it will give a retracement into that area, and then it will show a hold. And so that's what I'm really kind of hoping for here, is that this will go bullish, which it did. Here we go. And then now either it will continue or it will give a little retracement and allow us to get on board with this momentum.
And the 15-minute ORB lines up exactly with that 300 to 450 levels I was talking about. So couple confluences for kind of breakout confirmation if you want to wait for that.
I would definitely not be chasing these shorts because the news was not really, I mean, it just basically says that they don't have it together, but that wasn't anything like earth shattering, I guess.
Yeah. That's what you call a bear trap for sure in my mind.
Yeah. Don't chase those buys.
Looks like bulls are holding, so I would not be surprised with a push over this recent high.
You guys really needs to break back above 76. Would be beautiful.
You mean 96?
Oh, 76,000 for ES. I'm sorry.
Oh, okay, gotcha.
Yeah.
I was like 76 is way down here.
Sorry. Oh, geez, I need to be.
Actually, that's where we held, so that kind of makes sense.
Yeah. Yeah, still in play, right? Okay. What she's got.
Yep, beautiful hold by the bulls there on NQ. Yeah, it looks like NQ is the leader so far this morning.
Yeah. Yeah, NQ. ES is a little bit of the lagger, which is why I was like kind of interested in getting in there because that was still closer to demand. You know, like I liked the risk a little bit better on that because
so you can get in before the rocket ship.
Yeah.
Nice little sandwich on NQ. We're trying to break over. So 440 right now. That's the ceiling for the moment. Candle close above that. She's gonna go. I would have loved to get in down here. That's unfortunate.
Oh, dude. Already pumping.
Would have been done for the day.
Yeah, I'm gonna keep in this ES play.
And please, guys, if you don't mind, shoot us a like and a share, subscribe. We're trying to get picked up by this YouTube algo, and any little things help.
Yeah. Exactly. If anyone is trading ES, I'm looking at if it can break 7,600, then 7,605 is right there as my next target up.
Yep, I see that. Good morning, Jay Leo.
And if NQ can break VWAP for NQ, I like the 3,500 is a nice key round number that we're pushing at here.
Yeah, I'm trying my hardest not to just hop into this, guys. It looks really, really nice.
You see my cup? It's I'm coming in ready for Monday. I'm not even gonna lie. This is my Boss Lady coffee cup. It's not small.
Yeah, I have a massive cup too.
I have different ones. I kind of like different coffee vibes in the morning. But this one is appropriate for the day, I think.
I wouldn't be opposed to about a 425 long on NQ if we can pull back there. It's just we're so close to a major resistance I have that the RR isn't there for me. I don't like going for one-to-one plays this early in the morning.
Yeah.
But if you are in longs, I'm really looking for a 500 push. Good morning, Mary.
Good morning, Mary. Mary, I put together my presentation this weekend for Tuesday Psychology Lab tomorrow, and it is wholly inspired by you, and I'm very into it. It's going to be a great conversation. So thank you for that. All right, we're going to retrace here a little bit.
Maybe another short play back into the open longs from there. I would love to see that. I have my resting order ready to break out at 360. I'm keeping it there because you know what? I've gotten wicked in before on an 80-point wick, and we'll see what happens. I think was that Thursday, Becky? What day were we trading? Friday? I don't remember.
Thursday, you got a sick wick buy.
Yeah. And then Friday, I think I got to sell. It went like 40 points and then negative 40 points within a second. So the wicks, the wick-ins will happen. So, you know, there's a lot of times, guys, where I'm like, it should pull back to here. The market baits me in to move my entry, and then what do you know, it goes right to where I wanted it to.
Yeah.
So if you have your plan, keep your plan there and be patient. But honestly, these I think I need to start laying in a little bit more in the early morning.
Yeah.
Because the fills aren't as exact for me as a little bit later in the morning when the market slows down. Started visualizing my setups. People are looking for trade-in now. Does not seem like my setup. Yeah, just use us for confidence, guys. You don't blindly follow us. If you don't agree with us, like tell us what you think, and we'll walk you through it. Maybe you're seeing something we don't.
Mm-hmm.
I know we got a bunch of badass traders sitting in this room.
Yeah, 100%. And I love the whole, like, I don't love it. You want to understand the setup that's coming and be all about it in order to put your risk on the line with it. Like if you don't like it, wait for something that, is better. Like I love that.
Yeah. And if you don't understand why we're doing what we're doing, ask us. We're literally here for that. This is our purpose.
That's what we get up for, guys.
Look at all this selling pressure right at the 450 level on NQ.
Yeah.
That's why I don't just want to hop in up here. Like, although I do think a 400 to 410 long, like that area, it's calling my name. And ES is
we're getting there.
Actually looking a little bit stronger now. As soon as I said it.
Let's see if it'll
chopping you around right now.
Mm-hmm. Yeah, right now there was just a little bearish push here.
Mm-hmm. Saw short pre-market, but didn't play it. It was my setup. That was a news candle. I don't know if you heard us talking earlier. Get 100 people in here, and maybe I'll grab the guitar. How about that?
Ooh, yeah. We need that. We need that, guys.
We need a gimmick over here. Is that what we need, guys?
We need a good time. We need to celebrate this beautiful market.
Don't ask me to sing, though. I'll tell you, you guys do not want to hear that. The stream will turn from 100 to 10 real fast. God, can you imagine? I'm going to be all over social media like this guy at BluSky sucks.
I don't know what's happening market open, but the guitar is nothing to play.
Right? Oh, my God. All right, here's that 400. I want to see if bulls can hold. If not, we're running right to this 360 entry.
Mm-hmm.
And we'll see. Now, look at the 30-minute candle, guys. This is what I was talking about. I said everything under the 30-minute looked bullish, but the bears really, really need to defend this 450 level for more downside, and they did. So that's why I didn't want to hop in here. If you want, like I said, if you want to mark out 450 and 300 and just stay away from that, that's your confirmed breakouts levels.
Yeah. Now we're given the retracement right now. And so now we need to see somewhere in here if it's going to hold.
Yep. So there's that 400. So that's like the first line of defense is 400. Lose that. We run to this 360 level I want.
Mm-hmm. And then 340 is right below it. So 340 to 360 is.
Yep. That's my like value area for an entry.
Yep.
Where I'm really, even if it fails, I'll take the trade every time because we're risking like 20 points to go for 100, which like anytime you get a 3 to 4 to 5 to R play, you take it every time.
Yeah.
No hesitation. All right, there's that 400 hold. My biggest advice to you guys are just not to get caught in this area. And let me just check. We got 6 minutes till like some actual news.
Yep.
Israel tells residents of Beirut's southern suburbs to leave. Ooh, we might get some. They got some chess going on out there. I'll tell you that.
Yeah, I wonder if that's what happened with this like little push we got a few minutes ago.
Yeah. I don't know what time was that at. 54. That was just now. So yeah, that probably makes sense. All right, we should get this. I'm gonna put an SL on just to be safe. A little under 340, just in case it knifes through. And for my full bear trigger, if we break under 270 on NQ, I will flip my bias to bearish. Because that would be Friday lows.
Yeah.
We actually broke Friday lows on ES.
Yeah.
Oh, I see why you chose ES. Okay, that makes sense.
Yeah.
Oh, I got tapped in. Damn.
Yeah, it's dropping here. I'm just very
Wow.
curious now if we hold or what we do.
Yeah,
Here.
let's see. If you guys see quick money, take it. Like this is, we'll see.
Yeah, this is a very interesting area right now.
I want to see a push above 380 for this to feel semi-comfortable.
Yeah, I like this opportunity, but we got to see it start wicking here shortly.
Mm-hmm.
And then again, there's news in 5 minutes, so could be good. We'll see. Hourly. Yeah, it's very interesting hourly.
I don't know about this one. We'll see.
I know. I really want to see it hold here. I like this pull down and this retracement. I like it, but I need it to I don't want like if it keeps falling, then that's bearish continuation.
And that's why I didn't want to hop in at that 420, 450 level, guys. Like that would have been an instant stop out. Yeah. Expecting a 4-hour retracement to the 0.5, 0.6 levels. Yeah, I mean, that typically happens. We'll see. See if we can get a quick $100 out of this. I'd be happy with that. Okay, give me this 380 push. I'd be very comfortable with a slight hold. All right, there we go. There's like 15 points on NQ, guys. A decent little start.
Yeah.
But we can't get over 380. This is just going to go right. Yeah, there we go. See? Right back down.
Yeah, it would be great if it could. We'll see. 3 minutes till news, then we'll see what's what.
Guys, typically when I call these levels out saying we need to break above this to feel comfortable, if it taps it and rejects, it's usually not going to work. So we'll see.
Yeah.
Because the way I play, I want an instant wake up, break the resistance, and then continue. So bear bias 260. Yeah, I have 270. If we break below 270, this might just go. We'll see. There's that 340 tap. That was kind of the bottom of the value zone. So hopefully bulls can defend that. We're seeing green and red flashing on the screen. So as always, your account, your money. Take profits, take losses whenever you see fit.
Yeah, you got to feel comfortable with your risk management here for sure. The news, it's expected to be kind of neutral, I think.
Oh, yeah, that's in 2 minutes. So, okay, we'll see. Such a sniper entry gives me anxiety.
It's an entry model. I mean, that's what I was looking for is this bullish push and then this retracement. So now I want to see if it'll hold here.
Just based on that 80 rejection, I'm going to assume this is going to, this is going to get stopped.
Yeah.
All right. Stopped out on that one. We lose 300, guys. This could get very interesting.
Yeah.
So let's see. So now what I'm seeing, guys, is bears want 350. Anything under 350 right now, bearish.
Yeah.
But I'll take that play every time. It was worth it. We saw a little bit of gains.
Yeah.
Nothing that I was comfortable locking in.
Yeah, we gotta see what happens here.
Mm-hmm.
NQ is given bigger swings here than ES, but still similar patterns.
Oh wow, yeah, a lot bigger. That's pretty interesting. So if you are bear biased or you are short, keep an eye on that 350, 360 level. Which, just looking at very small time frames, it literally perfect break and retest to the downside.
Here's that.
And the only reason I don't want to take a short here is because we could come down to 300 and bounce 100 points just like we did at market open. But if you are looking to go short, 350, 360 is the area you would take it. This is almost a textbook Head and Shoulders too, guys.
Uh-huh.
Oh God, I can't draw. Like that.
The news
That is textbook Head and Shoulders, guys.
The news came in fundamentally positive.
Okay. I don't even think that matters right now. I think this is taking a backseat.
But that is done. That is come and gone.
So Israel just said they're gonna bomb Beirut unless something changes. And it's hard not to flip bullish when you see stuff like that. But as you can see here, bad news came out, completely retraced. So we have to keep that in mind. Did you cut those shorts? Or are you still in? Or the longs?
I'm still in.
Okay.
Didn't break my level. I added.
Okay. Cool. Yeah, this is the nice little demand area here. We'll see.
Yeah, I started small and then I waited on the retracement here, and I just added a little bit because this is demand for me. But NQ is pushing down lower, so it makes me a little uncomfortable. But yes, it's more so like holding demand. You know, it's a little different pattern.
Yeah, absolutely. So if ES does decide to drop, NQ's it's going to go.
Yeah.
All right. So what did this 4-hour candle do? Hard to argue against this 4-hour candle.
Yeah, she's kind of a beast.
Yeah.
But look where she fell into. It fell hard, and yesterday
exactly. It's
you know what I mean?
Right into the spot it should fall.
So here we see. I mean, it definitely doesn't have to hold. Support never has to hold, but we're in it.
Ooh, it's hard. Oh, this is a tough area. I starting to put my bear glasses on, Becky.
I know.
Time frames are starting to line up.
I like the bears from a higher area. I don't know.
Yeah, I mean the pop after news was it.
Yeah.
I hate to say it, but I'm going to try a short.
Do it.
Yep. Well, so I'm going to see if we get a pop up to this 345 area.
Breakdown. Mm-hmm.
Now, when I say I'm flipping bears, guys, that doesn't mean I'm just hopping in. Like, I need to see a big push back up to want me to get in. You don't want to sell the bottom, and you don't want to buy the top.
Yeah.
And I know we've all done it way too many times.
Yeah. The bears are in control right now. They broke lower on NQ. They did not on ES, but
yeah, ES is holding much better.
I know, which means they're
for sure
slightly out of sync. I'm real close to my lot that I got on this long.
We're actually, if I'm looking at the 4-hour chart, we're in a pretty choppy zone from 250 to 350.
Yeah. They're like 260 is a key support on NQ, but it's a bit of ways here, but not that far.
Yeah, not that far for NQ.
It breaks the pre-market low on NQ, which is 290. 260 is like right there.
Yeah, it's gonna run there quickly, guys.
It's kind of a pocket of drop.
The daily chart does need a cool down, so if today does flip bearish, I'm looking for like 120 on NQ if you guys want to mark that. I'm most likely going to get this fill at 345, guys. Oh, what a hold. What a hold by the Bulls.
What a hole, what a hole, what a hole.
ES is just sitting there, though.
Yeah, she's like close to my entry almost here. So
All right, we are in. I want to see a push down to like 320, guys. Would be nice. Quick 10 points. We'll see. We'll see if we get the actual continued move or if that's just a reaction.
Mm-hmm. Vodka caught the bounce. Double bottom, yeah. We'll see. We'll see what happens. This is
all right. Quick $100 if you're in with me. We're almost at my first TP. Oh, we missed it by a few points. All right, there's TP1, guys, for the quick scalp. Let's see if we get a continued move or not. So quick 25 points. And that's where the Bulls need to hold if they're going to push back out of this.
Yeah.
I honestly I'm tempted to just lock in my gains in this area.
Yeah, I am very interested to see. I'm uncomfortable shorting in this low. But it definitely, I mean, it's pushed, so we'll see.
Mm-hmm. All right, there's the hold by the Bulls there. Let's see if I foolishly am holding or if it's actually going to go. All right, there we go. There's full TP1. If you want to take some off or hold, it's up to you. You know what? I'm actually just going to take this, guys. That's good enough for me. 25-point, nice little scalp. I don't think we saw any red on that one. So a little bit green on the session now.
Beautiful.
This is just a very iffy area for me, and we're close to the bottom. So I'm just gonna take my money now. Now let's pump for Becky.
Yeah, I'm like right around my entry on my long here.
Let's have the whole team win. That was a great cut too because we're back at entry.
Yeah, that was a perfect choice. I love that.
That was definitely a iffy hold. I always say if we get tapped in, guys, take the 25 points like immediately.
Yeah.
Get it quickly.
We have the opportunity to get in and out, so like that's a resource we should, and
that's another thing, guys. Like Becky's long, and I said I'm going to go short, and she didn't cut because she's holding to see if we get the actual move we want. I'm just trying to get some points. I'm just trying to steal some money from the market right now.
Which is funny because I do have scalping tendencies, but this one I'm like, I just really like this demand. I've been hunting this demand all day, so I don't see it failing yet.
Mm-hmm.
But there's scalps in both directions, both already this morning. But I did hold, and I am green, and I haven't closed the trade yet.
That was a much better hold on ES.
Mm-hmm. She didn't fall as hard, and she was sort of dancing around that demand, which I was very interested in.
Yep.
I'm aiming for my scale at 605 on ES.
I like that. So for the Qs now, we're kind of back in that range I was talking about. Bulls need to push over 400, or else this is just kind of chop city, and both sides we're scalping until we figure something out.
Uh-huh.
So right now my scalper hat's on. Before I get into play, I kind of decide, am I scalping or am I holding? And right now I'm not holding. And for me too, it was very hard to make that transition to am I doing this or this, because the FOMO kicks in a lot when you put scalper's hat on and you take your quick money and then you see it go the way you want. But guys, remember, any green is better than no green. There's always more trades to take.
100%.
Vodka is mega long with you, Becky. There you go.
Yeah, all right.
Good long right there. 50 points secured. Beautiful. You must have got in when I got out. Love to see it. And that's another thing. Like, if you're long biased and I'm short and I take my profit, that's probably your sign that your longs are going to work at that level.
Yeah, it's a good sign.
All right, nice little hold. This is the same setup as that open, guys.
Mm-hmm.
See if bulls can hold this 360 area.
Yep. We can get above 390 here on NQ. I like that.
Yep. Exactly. That's literally the play I took earlier, Becky.
Mm-hmm. Go.
Took a few hundred. Hey, there you go.
Dancing.
Yeah, this is yeah. They're trapping a lot of people right now.
Yeah.
And remember, guys, it is Monday too. Don't go too nuts.
Yeah.
We got the whole week.
That's right. Right. Hold steady. Give it time.
It likely rips, but I need to see conviction, not hold. Yeah, that's kind of what I have my scalper's hat on, Becca. I'm not seeing any real confirmation on either side. Bulls, to me, I'm just purely off the 30-minute chart, which really shows us like where the market may head. It looks downside, but we're sitting at key support, so it's either launch pad or we're gonna drop.
Agreed. I totally agreed.
It's one or the other, guys.
This level is something. So what she gonna do?
I always feel silly saying like, guys, it's either gonna go up or down, but I mean it is right now. Mm-hmm. That's where we're sitting.
Yeah.
Mondays and Fridays are account wreckers. Yeah. I mean, yeah.
Yeah.
Monday mornings for me are kind of very iffy. The rest of the day, we either at least have an established range or a trend, but the first like 2 hours, hour and a half, I tend to agree with you. And then Fridays are going to Friday.
Yeah. Fridays are Friday.
Fridays for me are take your money and just log off.
Yeah.
But for me, I don't really want any part of this right now.
I don't either.
I'll let Becky hold down the fort for us.
I'm gonna hold. We'll see. See what she does here.
I pretty much accept trades on Monday as open as gambling. Yeah, I mean it depends. It depends. The longs were pretty obvious this morning. I wasn't able to catch them, the early longs.
Keep it small. I like to keep it small on Mondays. That's why I was able to hold, because I wasn't in for any kind of size, you know?
Oh, yeah. If you were in like full size mini, yeah, no chance you could have held that.
Yeah. Yeah. Very different.
Yeah. ES just flat right now.
I know. She's kind of meh.
Yeah. I mean, you see it on here. We've streamed and made like $650 off 3 micros.
Mm-hmm. Yeah.
So you can print. You just have to get the good setup.
I agree. We'll see. We'll love it for it to hold here.
And it is the first day of the month, guys. What did that monthly candle turn into? Well, can't argue that monthly candle is not bullish. Oh my God. Wow.
Very interesting. We'll see. The way it pushed up overnight was very interesting to me, you know?
I'm surprised it didn't continue, honestly.
Yeah. I think the day is young, and I'm not calling it done yet here.
I thought London would have kept it going, but right back into the zone. Look, I actually did open the charts last night, and the setup was pretty clean right at open. But trading Globex at open on a Sunday is just not something I'm interested in.
Yeah, I was all wrapped up with family, and
yeah.
Of course, you know, a trader always a trader. Like I pulled it up to see what's going on my phone.
Yeah, exactly.
How's it looking? How are we opening? Where are we going?
Who sings that song and stuff? I don't know, man. I'm not sure. So to me, this is the bullish setup on the small time frame again. Almost the same setup we had at market open.
Mm-hmm. Pump it. Come on.
Bone Thugs and Harmony. Oh, Wake Up. Yeah.
What? Who's speaking my language? Okay, that was a minute ago. Now I feel like I need to find that and play it. Mm-hmm.
All right. Give us something, guys.
Pump it. You know you want to hold.
Massive consolidation zone on the 15-minute.
Initial balance going to be interesting. 15 more minutes here.
Yeah.
This is tight on you. Yeah, I think he's got a little more range.
It's hard for me on the longer time frames as a trend trader to not be looking for shorts right now.
Yeah, I get that.
What are you guys out there looking? Anybody looking at anything specific? Are you long biased? Are you short biased? Do you not know what's going on? Are you sitting on hands? Let us know.
Mm-hmm.
I don't think I want any more of this.
She's not cute. She's dancing, and a lot of times on Mondays mornings and often on Fridays as well, it'll get this consolidation. Ooh, there she goes.
There's that 90 push on NQ, guys. 400. Let's see.
There's some volatility right now. There's some volume coming in right now.
Looks like China and U.S. navies are discussing something. I don't know if that has anything to do with what's going on now, but that's interesting.
Yeah, it does look a little double bottoming, a little WE on the smaller time frames, James. We'll see.
Got TP'd on longs. Nice.
Mm.
Feel like if you're going to drop, it would have dropped. Yeah, bulls are holding. It's both sides are fighting right now.
Yeah.
This pre-mar, they're this like open top at like 450 and then 300. That's your zones. 530 is the area I wanted for longs earlier. So I kind of agree with you on that one.
Yeah. I think we have room for a little bit of momentum in New York session here. And so I think in the next half hour or so, we should get some directional energy.
But yeah, I see a couple of you guys mentioning a double bottom. I mean, it's very, very obvious right here. It's jumping out at you.
Yeah.
And then you want to break the neckline of this 440 area for confirmation. So the way to play this is either try to snipe the bottom of the W or
breakout.
Wait for the breakout of the neck and like do one of those things. Which is what I'd probably feel more confident in. It's just confirmation.
Yeah, right now we're still in any game can play because the Bears defended this on the first push up. So it would be great if we could see a break above that. Especially since that would take out some profits for me.
And if you guys see the like W they're talking about, it's double bottom, W, whatever you want to call it, support hold.
So the Bears are putting some wicks on these. You're giving me some bear glasses here. Just
it's like you're either in and you're holding or you're waiting, in my opinion, right now.
Yeah.
And I absolutely hate the type of plays you are in right now where you're just sitting around break even for 45 minutes almost now.
Yeah. I love it. The bouncing red and green business.
Yep. You guys know me. I want that instant gratification. I want to know if I'm right or if I'm wrong within like a minute.
It's way better. This is not my favorite either.
Yeah. Win or lose, get on with your day. I've had some days where I've literally held for like 5 hours and nothing happened.
Yeah. Come on, give us some volume. Give us some volume. Where's the money at? Yeah, I like this. I like this play too, vodka. Pump it. This week is Labor Week. There's going to be unemployment at the end of the week.
Okay.
This is the bigger news this week. If anyone's watching. Yeah, there's little things all week, but the biggie is Friday for Forex.
And we do have the podcast today, guys, at 1:00.
Mm-hmm.
You guys want to join us for that?
Yeah, I love that, especially on Monday, because we get to talk about like digesting last week and then what we're seeing, what we're looking forward to for the week ahead, charts and conversations about just growth in general as a trader.
Yeah, there's typically not much going on a Monday at 1:00. We have either picked a direction or it's just not even worth trading at that time.
Mm-hmm.
So it's good to break up the day. I enjoy it at least.
Me too. Come hang out.
All right. She's trying. This needs to go. Just pick a side, guys. Come on.
I know.
I'm with you on longs on shorter term. I mean, I think we revisit 450 on NQ again. And ES, we should get up to about 95, I would think.
Yeah, if NQ can break 450, then I think we're pushing to 500 pretty quick.
Yep.
Same we talked about earlier.
Agreed. There's 400.
Nvidia's got positive news, huh? Yeah, Matt's
I'm printing. Let's go.
Push it. Vodka and I are holding.
All right, so now that we've broken out on the Qs, bulls want to hold this 380, 385 level. Get this next push out. Obviously, 440, 450 is massive right now.
Mm-hmm. Yeah.
Yeah, not a bad idea to de-risk in this area. We've seen it reject here.
Yeah, we need some confirmations to hold the bulk of the position. 597 is the high on ES this morning for New York session. I would love it if that broke here. That's right at VWAP as well. That confluence could be resistance or it could break.
Mm-hmm. These are my night. No, you still have those? Nice.
Get it. Oh my God.
That was a crazy sale.
I love a good sale.
Use them for the risky plays. Nice. There you go. All right. She looks like she's going to run to at least 440, I would think.
Mm-hmm. I like the bulls here. I like this hold. I like the setup. I still haven't scaled out because ES is not as strong. It's not as strong as in either direction. It's kind of obnoxious right now. Come on, little lady.
You need 2 more buffer accounts. Are you trying to max out those funded?
I mean, get some more people in the room, and we'll give away some accounts. You get a new one as a gift, being part of our lovely community. Yeah,
or because I could see the bullish hold. It's just we got to get over this 440 to 460 range. It's a 20-point range that needs a break.
Dandruff hands. That's good. So scalpy. I don't even know. I might.
So I mean, if you're on the bullish side, you don't mind some consolidation here as long as it holds that 390 level, 380, 390. As long as it wicks up from there, you're good. But yeah, this is rough for anybody holding this morning.
True story.
Yeah, you're proof.
That's to that.
Yep. I might have to hop on you with you for solidarity.
Yeah, come on. Come play with the bulls.
I'll see. I'll see
leave my trade, or I would have scratched it. It's holding for me.
I'm gonna try to get into 380, get a little selling wick in and get picked up.
Good job, Vodka. That's awesome. Well, you know, nice that prop firms hold the risk for us. You know, like we can dance with it a little bit.
This chart's giving Big Monday vibes, though. We'll say that.
The amount of time this trade has been in profit, if it closes in my stop loss, I'm gonna have to walk away for a minute. Come on.
I did do a live account. First time since 2009. Wow, you waited like 20 years. Lost a grand a week later. Pulled it out and said no. I mean, honestly, guys, I got tapped in. I mean, use BluSky. Like, don't risk all of your own capital where if you have a bad day, it hurts you.
Yeah.
Like, get some consistency. Get like a live brokerage account with us. Fund your personal account. Use everything. Then you have multiple accounts, trade your live account on days where you're super confident.
Yeah. There's ways to make it all kind of work together. And
so I got tapped in at 381, guys.
Let's go. I like your entry.
I need to see a push over 400. No ifs, ands, or buts.
Yeah.
And I'm playing like very, very light, guys, because I just don't like the chart movement right now. So 390, 400, break over 400, we should be fine. But until then, we're just gonna dance around. I'm probably gonna see red, green.
Yeah, the fact that we can't like VWAP makes me uncomfortable. I
don't like the longer time frames on anything right now. It's not showing us anything.
Yeah.
Yeah, I'm just keeping an eye on the news. No news coming out yet. And guys, like I'm still scalper's mentality now. But if we can push out of here, maybe we'll get a hold.
21 points initial balance on ES, which is tiny. Tiny.
There's a quick $100, guys, just off of 3 micros. So do what you want with that.
Yeah, your fill was good. I like this.
Yeah, I was there. I had to put it pretty far down. All right, there's 400. There's TP, guys. See if we can push past that. And like, I'm not saying to play full size in this area, but if you did, that's a quick $400. And 400 ejection as expected, right back to entry. Yeah, you never go broke taking profit. I agree. Taking profit pays the bills, guys. That's what I'm here for. I'm here to pay my bills.
Locking it in.
Yeah. And I know it doesn't seem like a lot, guys, but these $150, $200 plays add up. I know Mike even said that before he became who he is, he was $200 and he's out.
Yeah, which is a recipe for like allowing everything to compound and grow and like really add up.
Especially if this is your side gig, which it should be for everyone in here, I think.
Yeah, for quite some time.
All right, so we got TP1. I didn't take profit, and now we are red.
Yeah.
This is what I was talking about with this price action, guys. That's what I was saying, scalper's mentality until I see a reason not to.
I think I might just shut this off right here. I'm not. It's like driving me crazy. Ugh, held this long. Just leave it. I'm gonna leave it. Leave and stop where it's at.
You've been in this play for way too long.
Oh my God, feels like 400 years.
Right?
That Titanic gif of like.
It's been 84 years, right?
I feel a little bit right now.
All right, nice hold by the Bulls. This should push out now.
Oh, I really don't want to scratch this trade. I've been waiting forever.
There we go. There we go, guys. Beautiful. Beautiful.
Beautiful. Okay. Here we go. Now we're cooking. We just talked a little smack. Now she's.
Let her cook, guys. Let her cook. She's making it really hard for me not to just take profit.
She's driving me bonkers a little bit.
Well, you've seen red and green like 100 times.
Yeah. Yeah. Every 2 minutes.
It's a side gig for me, main gig pick. Yeah, I mean, I'm a firm believer you should just always have something in trading also. Trading just doesn't take enough time for me. I've done it before and I'm bored out of my mind.
Yeah.
Nothing worse than finishing on a Tuesday at like 11 o'clock and you have nobody to hang out with.
Well, and it adds pressure, and you can like in that situation, if you're all chilling, you're at home and you're guessing like, I guess it should be done. Well, you can mess around and like continue trading and get back all your morning profits too. So if you just like give it a couple hours and then have other things, it's a good headspace as well. Over trading is dangerous.
I'm gonna take this money, Becky. I hope it keeps going, but I'm taking it.
I love that for you.
What do I always say, guys? Like, if you see $200 within 2 minutes with just a couple micros, like, don't feel bad taking it.
Let's it all grow.
But yeah, when I was trading full time, like I said, it'd be like 11 o'clock, and I'm like, what do I do all day? I'm like, okay, I can go to the gym. Okay, I'm done. It's noon. Now what do I do? And then what do? You look at the charts, because what else are you gonna do?
Right.
There's the push. I think you're going to get this, Becky.
I feel good.
ES is lagging.
It is. It really needs to stop. So I feel like that's part of my annoyance as well. Like NQ is like merging up and ES is like meh, meh.
Yeah. At least the Qs are giving opportunities today. ES is just you're holding or you're not. That's why I do like NQ more, because you can squeeze out 20 points in the middle of a bunch of BS.
I traded NQ more last week than I ever have, and I don't know. I might need to start adjusting my eyes a little more.
Yeah, I think if we're consolidating, NQ is what you really need to be looking at.
Yeah.
All right, we pretty much TP'd out on that if you held 430, 450 area. This range is where it gets really gross, guys. This area.
Yeah.
That's why I'm okay taking that $170.
It's beautiful.
So I'm green on the stream. That's all. If I'm green on a Monday morning, I'm very happy.
I'm still locked in. Not a thing.
I'm learning patience. Good. I'm glad somebody learns something. If I can help one person, I'm happy. It's a great. If you guys are watching and you're new here and you don't understand how we're trading, both of our styles are pretty simple. If you hang out for a few days, you should kind of start putting the pieces together.
Yeah, we talk about what we're seeing and what we want to see, and we're all glad you're out. And
yeah, I mean, I'm glad I'm out.
Okay.
It's a lot like fishing with these entries, trying to adjust for momentum trading. Yeah, I mean, momentum trading works too. I get left behind a lot trying to get these sniper entries, but when they work, they work. I'll tell you that. That's the difference between holding 20 points of drawdown or just trying to get the extreme lows.
Man, she's playing.
I'd be surprised if you don't get a push out here. This is just.
I agree. I think that's what it's going to do, but it's like this is obnoxious.
Mm-hmm.
When I finally get these points, I'm gonna say goodbye.
Yeah, I'm surprised ES is literally doing nothing.
Oh my god, I'm so. Come on, pretty lady, we're friends. Let's go.
All right, there's the push on NQ. Every time it gets up to 430, 435, just gets smacked.
Yeah. Yeah, I mean, I'm a VWAP trader, and this rejection off of it a couple of times is a bearish sign.
Yeah, that's a good point, Vodka. If it does push out, it could just be one of those news candles, like a 60-point ripper after all this consolidation.
But then what would even be the good news? You know what I mean? Like, this is kind of a bad news backdrop situation, so.
All right. I am not looking to get in play in this area. I'll be back in like 2 minutes, Becky.
Okay, cool. He's probably like, I locked in a couple of good scalps. This is dumb. This is not the cute one. Not the cute market. I get it. One micro runner. Good job, Vodka. We'll see. We'll see. I like the NQ is stronger, but I would really love it if ES started catching up. But NQ's at a key level here with this VWAP and the resistance of the morning. So either we really now should be the time where we break it. We had our pullback. Give us a move. We'll see. We'll see what she's got. There isn't planned news today, but Mondays can often just mess around for a while. Oh, crude oil. Okay. Let me look. Come on, pump it. Oh, crude oil looks strong. Holy moly. Just flagged out a little bit since after the first push up, and crude oil is pumping as ES and NQ are at resistance. And you're bouncing for a retest. Yeah. Same. It's like at my stop on this ES long. Too many bears on the table here. About to take me out. Well, I'm glad that the people who were scalping were scalping. I tried to hold. I don't know. Wasn't doing it. You know what? They call me paper hands too, but you know what? Like locking in gains is locking in gains, especially when the market does chop a lot. Like it's not uncommon that it kind of messes around like this. So, is what it is. Didn't tag my stop yet. We'll see. I like the NQ is stronger, so. PTSD does contribute to paper hands. That's a very real thing of like just being cautious and protecting. And I think it's very interesting the way that the market is moving because it's almost hesitating, like waiting, you know. And I think we see that after news, it is sometimes unclear that we'll see like a hesitation type of situation in that backdrop of like kind of waiting and see if there's another shoe that's going to drop. And that kind of fits with this 520 target. Yeah, I like that.
Yeah, I think like most people, everybody's like, what the heck is that supposed to mean? Is war on? Is war off? What's going on?
Right. Can we get some clarification, please?
Yeah. And it's a Monday. I mean, people are like, laptop closed. Deal with this later.
Yeah.
This is Algo price action, if I've seen it. I mean,
Yeah.
ES, Reddit, right back to support. Wow.
Yeah.
This is tough price action to navigate, guys. So
Really is.
Be safe.
Lock it in. Make sure your risk is light if it's not a great setup.
And that's a really good thing as a trader to identify when to kind of pump the brakes and not go full gas. Because once you can do that, you can keep your accounts alive for a lot longer.
Yeah, which is a great place to be in is the account stability with reasonable on each side. Because we're all going to get home runs in there. We're going to get home runs mixed in. And so when those days can really buoy the accounts and the other days just kind of hold her, that's a recipe for profits.
That's why we say like trims and scalps pay the bills, but you'll get the home runs and those will pad your accounts and get you some money in the bank.
They give the pop and then you can do the consolidation and you can pop and consolidate. That's a nice trend, Accounts. I mean, maybe it's our cues. Pivot moment. I mean, this price action is hard this morning. I can't even. I feel that in all the ways.
I mean, we're like I said, guys. This 30-minute news candle until we break either side, it's going to be like this. It's just it's just what it is.
It literally got less than a point from my stop on ES, and it's still flipping holding.
Yeah, I mean. At this point, you're probably like, either just stop me out or go. I'm tired of this.
Literally, it was like pushing at my stop like 3 minutes ago, and I was like, just do it. Just take it. Just end this. Still in. Okay. I
mean, it's a bullish set, at least on the cues. It looks bullish, but it's just so tight.
Dude, I would take a long in demand. Like, I would take a long in demand. That's what I meant. So I'm going to just see what's
going on. You got to take your setup when you see it. Sometimes it takes forever. Sometimes it doesn't.
Yeah.
But no, that's a brutal hold up.
OMG, this is a special variety of Monday. I'm not going to lie.
Gold is doing absolutely nothing as well.
Crude is popping.
Yeah, crude's because they said they're going to close the strait. That was kind of a no-brainer, honestly.
Supply and demand.
Still under 100 though.
Yeah, Mary, I feel that so much. It's easy. It's not as bad to hold when you're in green, but when it's like messing around your entry, it's like I don't know why do we even have leverage on right now. Yeah, crude started hesitating the last 30-40 minutes here. All right, let's pump it. I'm team bulls. Let's go. Got a good buying wick on this 15-minute.
Look at that's a doji if I've ever seen one. Wow. You know what though? This is a really good hold of demand. It could just be a springboard for a massive push. We'll see.
I mean, we'll see.
I'm just glad I took my profit. That's all I'll say.
I know, dude. I love that.
It's a good point, Baca. I mean, Mondays, guys, great days for evals.
Oh, yeah.
Take the beat of the week on the fundeds, and then Monday, Friday on the evals or buffer or whatever paper.
Yeah. Ease into the week. There's no reason to like put full size on, especially when traditionally Mondays are a little bit obnoxious. And we got the whole week. We got the whole week to like print some money. So if we don't like it, we don't like it.
If you're in the queues, I think you're good. ES, I'm not sure.
It's
not showing me anything.
I feel that in my soul right now.
I know. When I was a newer trader, I'd blow an account on a Monday, and it would just start the week off on a spiral, and the week was shot basically.
Crabby. Hmm. The moving averages are obviously trending down on ES, but not as strongly on. In Q, they settled out, man. They're kind of swooping under, so.
Yeah, Vodka, I know your P&L on that buffer is going up and down, but the fact that it's alive for that long is pretty crazy.
Yeah, that's beautiful.
You know, most of these accounts have that lockout function. Just remember that.
Yeah, the tilt benders is the really tricky situation. You gotta try and pull out of that as fast as you can, because that can get reset fee.
I've done that so many times on live accounts, like three weeks of perfect trading just for one day to ruin it all.
Yeah, it's a heartbreaker, and then there's some emotion with that, and emotional trading is tricky. It's not generally the best.
This is one of the few like careers or jobs or professions, whatever you want to call it, where you can literally ruin 6 months of progress in a day.
And then you need a little break after that. I mean, you can, or I mean, you can take it out on some evals, but like it, I mean, either way, your mind will need a period of reset, whatever that looks like for you, of like letting it settle down in your.
It really is you versus you in this game.
Yeah.
And trust me, back in the day, there's no way I could just sit here and look at the chart and not take trades. So if you're itching to trade or you're just like over trading, it's everybody does it when they start or until they get over it.
Especially when it's giving a little false signal to kind of.
There's a lot of traps right here. Like
it's
especially if you're a smaller time frame trader.
Yeah.
Like right now, guys, if I am looking to go long, I'm only looking at this 380 to 390 area. You want to get at the bottom of candles. If you're just a piece of advice, if you're going long, get into the bottom of structure. If you're going short, get into the top of structure. That will save you a lot of money.
Yep. You got to watch that risk. You know, where you're going to put your stop loss needs to be watched.
There's always another bust. That is exactly right.
Yeah.
But yeah, guys, this is a very boring way to start the week.
No.
But we would just want to show you you can still make money in this stuff. You can still do it. You just have to really, really have your rules and just lock it in.
Yep. And trade a size that you can accept, you know. Like right now, mine is slightly red. If the stop gets taken, like my accounts are fine. Like I'm gonna pivot off and let it be and see what happens later in the day. See if I can find something I like better. But the risk is something that I have fully accepted on this trade, and now the bulls are just gonna reward me with the pop. That's what's up.
Yep, there's VWAP on the Qs, guys, and that 440 level again. This is so bulls really need to step it up and push it through. You're gonna need a nice volume push to do anything.
We've been waiting all flipping morning. Let's go. What up,
well, if you are long on the Qs, this is like, do you want to keep holding or you just lock it in? Make a decision right now.
You're at a point. It's at a point. But, or, you know, de-risk or manage your risk or something like that. Because if we can break the morning highs, we got some room to pump.
Yeah. Yep. Absolutely.
Like we have needed a direction. Like this day is nowhere near what the day is going to be, in my opinion. Like we need a little bit of movement would be reasonable for the indices that we're trading. And so if it could push, then it could push for a bit.
Yeah. If we can break these morning highs, this might become a trend day, guys.
Right.
When we're only an hour into it. You got to remember
or at least give a couple hours of a trend, you know?
Yeah. It feels like it's been 3 hours, but it's only been an hour.
It really does. Really does. My stats are so funny. Like I have such a high win rate on my like 5 to 8 minute trades. And then like my long ones do have a high win rate. It's the ones that are like 30 to 45 minutes where like I think that's like my red section of data where it's like, yeah, those get unpleasant. I hope I don't add to that metric today, but
Mary's asking what your risk on this trade is. Like how many points are you risking and what's your TP points?
Oh yeah, I am risking $400 and it is right at, for ES, I'm at 7580.5 is my stop loss, which that's why this candle a few minutes ago got very close to it. So I scale in with micros based on the entry and the hold and the way that the trade is basing out. And then I just adjust my risk. And when I put my stop where I want it, that's the decider of whether or not I can add or not when it is bouncing. That's sort of how I structure it based on my dollar amount and how big I can get in, but the stop has to be placed based on a reasonable structure pattern. It's sort of evolved over time, you know, like I used to like just get in with like a mini and then it's like, shoot, like I have feeling capability and like it would mess with me. And so I worry less about the commissions of trading micros and more so about like, I want the control of like slowly building my position and then adjusting my stop. And then I know when I can't add any more because I know where my trade is invalidated and that's where my stop needs to sit. And so I leave my stop where it needs to sit based on the trade setup. And then if I can't get any bigger, then I can't get any bigger. And if I don't like it, I don't have to go full size on the trade either.
They are trying so hard to break out of here. But these pushes are just getting weaker and weaker and weaker. Good morning, Kako. Good morning.
If I'm not in this trade, I would not get in this trade. I don't think.
Yeah, that's I'm gonna let you watch it play out.
About to take me. Come on, just end this.
Let's see. This is wild.
Yeah.
For the Qs, guys, we're just looking for a 400 hold. Bull's got to hold 400. Vodka closed. You know, only took an hour to break 440. Yeah, just to get smacked right down.
Yeah, I'm not into it.
I mean, it's still holding bullish structure. Don't get me wrong, guys. It's just so ugly.
I get it. Bear versus Becky. Which is crazy because I like the shorts, but like I don't like the shorts in demand. I like bears, but I like bears out of resistance. Like that's a difference with me of like I am perma bear kind of energy, but I'm perma bear from resistance and in demand after we slid down overnight and there was a news push into it. I'm not as bearish. Yeah. Let's see. Has to all fit with me, you know, like the bears out of resistance can sometimes just sink so fast. It's so fun. And it can sink too. Like if we break structure and it breaks down here, it could be a beautiful sink as well. But I don't love it as much as when we're in like a better position on the charts relative to recent price action. But this could absolutely be a bear flag on large time frame too. More so in ES than in Q. And Q has been more pushing up. So
yeah, ES is, you know, what's interesting, guys, is so we're just gonna look at the hour. NQ has reclaimed the last hourly candle from that news drop. ES is below the news candle. So there's a big difference between these two tickers. Big difference.
Yeah. And Dow too is actually sold. Dow has broke the low just now. And so she's weaker. Ooh. So we're all sort of all over the place, which would be even more on edge.
So Nvidia is holding up tech. It's up over 4%. Everything else, it's not looking good. NQ's green, it's like barely green. MES is a little bit red. Oil pumping. Gold down, silver down. Interesting.
It's a mess. It's a mess of a Monday.
Yeah. Messy Monday. There you go. Messy Monday. I'm pretty bullish on market manipulation barley, right?
Accurate.
Yeah, how many times have we gone through this? Close the straight, negotiate some bombing, close the deal. No, we're not. Yeah, over. Well, remember, guys, it was supposed to be a two week thing 3 months ago.
Yeah, that was like in winter.
And we're literally in the same exact spot as far as I can tell.
Yeah, I'm with you, man. Fly is interesting. It's a teeny tiny body, which is it's in alignment with the range we've seen on ES so far today. Not a morning for 0 DTEs at this point.
Oh God, yeah, you get cooked.
Yeah, you get your wiped.
This is just so slow.
Strong word vodka. My coffee is about empty. I've been doing a lot of sipping and
I know. I'm about to just go re-up before I fall asleep watching this.
Move a little bit. We'll shut down the stream here in 35 minutes-ish, and then be ready to come back at the podcast at 1 Eastern. And
guys, during price action like this, go take a walk, do something. Don't just sit here and just zone out at the chart.
Yeah, move your body. It's always good for a little reset, especially after kind of an obnoxious morning. I wonder if gold's going to hold. She could have been flatlining here since open as well. It sold down and then made a new low in New York session and then has been going sideways. I'm very curious what will happen over there on Goldie Gold.
This is hard for me not to try to slap a short, honestly.
So I'm like, honestly, I just don't even want to trade.
You're like a point away from being stopped, aren't you?
Yeah, it's like on me.
Yeah.
And I'm just like, do it.
At this point, right?
Like not into this morning anymore.
How long can we go with splash squeeze? Yeah, a while. Glad you're out and done. Yeah, I don't blame you. I'm kind of glad I'm not in any positions.
Tell me about it.
You can always tell the market's doing nothing when the chat is dead.
I know, because the way, like we already covered this, obnoxious.
And it's like, as a streamer, it's tough because how much can I cover in this area?
Dude.
How many times can I say 400?
I'm gonna have to show you what it looks like to lose gracefully on camera.
I'm with you though. Like I want you to either get it or get out, just because this is brutal.
End it.
If you weren't streaming, would you just put your take profit and stop loss and not watch it?
I would be out of my office right now, 100%. Yeah. I would have left several minutes ago.
Yeah.
Yeah, I would do something else. I would be fixing breakfast. I would be preparing for what else I have going on in the day.
Oh, yeah. It's also like 8 a.m. for you. That's true.
Yeah. Yeah, it's early. My kids are out there zoning out. The fact that NQ is holding up gives like... Oh, yeah.
Holding 60 points, see when you break the highs. Good stuff. Yeah. I mean, part of me like kind of wishes I was still in that play, but also I'm glad I'm not.
Oh, now is this such an obnoxious place to be?
Take my 20 points, get the hell out of here. Highest P&L is 30 to 63. Yeah, so that you're pure momentum then if you're doing that. So much. My highest P&L trades are like 3 hours.
Nice.
No, Mike is out for a couple more days. We'll definitely post something in like the Discord or send an email on that.
Party.
Right? It's hard to argue against the breakout here. It really is.
It's going to be something if this trade wins because I've already accepted the loss in my mind. I feel like I should buy a lottery ticket if this actually works out.
The problem with people who have a lot of wins that I've seen over the years is you have like a very high win rate scalping, but like the losers kill you. Like the losers are big losers.
Mm-hmm. That's the trick in like true account growth, honestly, is to just cut out the massive losing days. Because if you have a strategy that works, and most of the time you can keep yourself pretty level, preventing tilt is the answer to profitability. Like you don't have to win every trade. No trader wins every trade. Like winning profitable traders who pay their bills with trading don't win every trade. But the key is to just walk away when you're at a tilt trigger point to prevent those big blowout days. And that is how the accounts can compound over time. Yeah.
I mean, I was telling you guys, what was it? I think 2 weeks ago, I had one of the best weeks in a couple of years, and my win rate was 62%.
Mm-hmm.
Because I cut my losers at like $150, and my winners were like $800.
Yeah, right now I'm looking. I'm really nicely green in this period, and I'm at 65% win rate.
Yeah, so you don't need to win. Just cut them fast. If you see it going against you, and there's a reason to get out, get out.
Well, and you guys know I'm sitting in a red trade right now, but like it's not something that's going to make me tilt because the size is reasonable. I've accepted the loss. I understand the setup. Like I chose to like hold 30 different levels to see if it can actually break based on like just the setup for me out of demand. And so in my mind, like if this is part of a losing trade, like it's not something that will hurt my account long term. And it is a trade setup that I saw. And so I wasn't trading emotionally or haphazardly, and I didn't over leverage. And so it's not going to carry over into my day, and it's not going to really harm my account, even though it will be a red morning potentially. It helps.
Exactly.
It helps.
A good way to not tilt is also once you get in a trade, just assume you lost the money. And if you're not okay with that amount of money, like adjust something.
Yes, that's what I'm saying. Like recognize that this is like, it's like an ante when you go to the table, right? You have to put your ante on the table, and like that money is gone. And if you win, like I love that for us. But like if that was the cost to play the game, that's what a stop loss is.
But yeah, Tom, what we're saying is don't be a big loser. Exactly.
Yeah. Exactly. Mm-hmm. Best loser wins. Make a choice, blank. Consider your risk and accept it.
I don't know how many times we can knock on VWAP. Oh, we actually just got to close above VWAP on NQ.
Let's just all take on some bulls right now for Coach Becky because love that.
This is such a weak run up. I'm like not convinced, but
I'm not convinced either. But honestly,
if you force me to pick a side, I'd go long.
Yeah. If you force me to pick a side, I would be in this long too, which is why I'm not scratching it. But like, I'm not super excited. I'm uncomfortable. I'm kind of annoyed. But like, if I had to pick a side, I would pick long. And so I'm going to let it ride. Do love the conversation though, like to a step back. Like if you're in a trade that is like just doing this, to like if I wasn't in a trade, would I join? Is a good question I like to ask myself when I'm stuck in these holds. And like right now, I would probably be flat. But if I had to pick a trade direction, it would be long. And so I'm going to trust and accept my risk.
I mean, there's been times where I ask myself that question. I'm sitting at break even. I just close and get the hell out of here.
Well, that's what that question should prompt of like, if you don't like it anymore and it's not giving you what you want to see, then like you don't have to be in it. Like it doesn't have to only be take profit or stop loss. Like you can scratch it.
Well, that's a good question too, because if you ask yourself, like, should I be in this trade, and you see like there's no reason to be in the trade anymore, probably get out.
Yeah, cut your risk.
You can always get back in, guys. If you stuck with us for this long, thanks. I know it's been a really boring morning, but I hope you guys learned something. If you learned something, let us know.
Yeah.
Sometimes we even wonder if you're listening, if you're just on in the background. So it's always nice to know like if you're enjoying the content, if you think it's valuable, if there's something you want us to talk about. Is there something you want us to talk about on the podcast today? Do you have a question? Do you have a topic I can debate Becky on? Let us know. Yeah. Totally I love myself a good debate. I love a good debate.
Gabber's listening. Good morning. Okay, good. Honestly, if you're at the market and you're looking and it's price action like this, like I love being in a room like this because it's like you can hear what other people are thinking and like gauge it together, and it opens up different eyes on it, and it helps like freshen up the morning when it is kind of obnoxious.
Yeah, and you got something to do rather than just staring at the chart by yourself.
Mm-hmm. The amount of times this trade has flirted with my stop loss.
Yeah. When you're sitting in like a 5-point range on ES.
Yeah, dude. Which is why I'm like, there's got to be some points printing. You know, like it really is a 5-point range. Like you're not being dramatic. Like that's legit. And so like it should do something in theory. Like it should take something.
Sorry, my dog is like banging on my door.
Aw. Yeah, no problem. I'm here. I got to deal with my cat. I know you guys heard her last week. Like, if that cat determines it needs to go outside, this inside outside cat is not quiet about it. Is going to make sure someone in this house is aware and makes it happen. So sorry about my background noise sometimes. All right, Bulls. It's time.
Eric, we actually talked about that earlier.
I know, right?
All right. She's moving. She's moving.
See, then she flips me back into green, and it's like, God.
So you're saying there's a chance.
So you're saying that maybe was the maybe.
Oh, there you go. We finally tapped 450, guys.
Would you move?
Here's the neckline on that W. This is a gross W, but it's a W.
Yeah, she's more like a squiggle.
So I'm eyeing this 440 area now. If bulls hold this might be a full breakout.
Mm-hmm. Yeah, this is really this is NQ held here.
But if this candle smacks down and closes below that, it's gonna be more of the same.
No more smacking down. You just shush with that. We're pushing.
Oh, that's a nice breakout on ES.
I know. Makes me want to take $50 profit after sitting in.
You'd be making what, $20 an hour to sit on this? Risk 400 to take 40. There you go.
That could be a morning. I'm not even gonna lie. I've had worse days. Let's be real.
Mm-hmm. I might have to get back in if we get this confirmed breakout.
I love it.
Remember, guys, if you've been paying attention, we're looking for like a close over this 450 level.
Yeah, and then we
a 30-minute candle outside of that, or even a 15, I would say, is a like what I call a confirmed breakout.
Yeah.
Small time frames, not really confirmed. Like right now, this looks good, but it'd be front running a little bit.
Yeah, then she can pump to 467 and then 500 quick.
Yep. Green is green. Green is always green.
That's right.
Ain't that the truth?
Okay. Come on, bulls. Show some muscle. Show some muscle.
Now, let's see if this 5-minute closes above this little neckline. Oh my God. Give us the breakout. Come on.
Seriously. Like not. Yeah. All right, I'm gonna lower my.
Oh, they smacked it down last second.
Yeah. The volume today is like terrible too. I don't know if anyone else is looking at that, but like where are all the traders at? Because the money is like. I think that's part of what's going on is like comparatively to other opens, like this volatility, this volume is like not it today.
Yeah, I mean, I'm not even looking at volume, but I can just tell if these candles, there's nothing behind them.
Yeah. It's not there.
I'd be curious to see what like Bookmap looks like right now. Probably nothing, no big circles, I'll tell you that.
No. We got the volatility pre-market from the news. Like there was volume there more so than even New York Open, which means like
I mean, I can only imagine how many people were short pre-market, got that candle, and closed their laptop.
I guess there was some volume at morning open, but
Land book map right now. Yeah, I can imagine. June 1st, red snapper fishing. True that. That season's fun. Those things taste really good too.
Okay. That was not a follow through.
No, they waited till the last second, no confirmation, smacked it down.
Yep.
I'm sorry this is so boring, guys. Like I'm looking for trades. I don't see anything that's gonna give me worth the risk. Like I literally do not.
No.
But these kind of days make you a better trader if you can stay away. If you can look at the chart, analyze it, and stay away and not click a button, I think it shows really big growth as a trader.
Cheers to that. Abstaining is absolutely a strong trading choice.
No, Becky's still holding, right?
Yep.
Sure
am. This last pump had me into green, and I debated just shutting it down. But now I'm like, dude, I'm like over an hour deep in this trade. Like,
yeah, you can't. You gotta just see if it plays out.
I don't want to squeeze anymore. I want to just let it be, let it do its thing. Like,
looks like it's consolidating. Yeah, I agree. This is definitely consolidating.
Lord help us.
I mean,
Thank you, Gabber.
This looks bullish. I mean, if you zoom out, 1530, we definitely broke structure.
Oh yeah, Gabber asked. Yeah, no,
we're just at key levels, so kind of anybody's game right now.
I really, after the first hour of market open, I like to draw initial balance on my chart and see what it's doing. And for me, this initial balance, especially on ES, is tight AF, like one of the smallest initial balances we've seen in a very, very, very long time. And that is a big part of that is that we saw the news right before market open. And so there was that big candle. So that will often give a consolidation. But for me, with such a small initial balance, like if it breaks up, like it could break up. And so I kind of want to be in. I want to be in long in demand.
Especially on ES.
Yeah.
It doesn't even need to be a confirmed breakout. It just needs to just kill this candle, basically.
Yeah. But I'm less interested, and I'm not in love with this trade either. So I did bring some targets down, and I'm going to take almost everything off if we can get back up to 94.5 on ES. Because that is in confluence with VWAP and the rejections we've seen so far this morning, and then I'll keep a runner after that.
Yeah. There's 450 on NQ.
Yeah, she's holding there at this level.
I need to see a 5-minute candle close above 450. But confirmed breakout for me is just anything over like the highest from New York Open, which was 467.
Yeah. For ES, like this last closure above 87 looked good for me. But now we pushed below it, and now we're back above it again. So I really like the 87 level. It's
toying with you.
Yeah. And it's key to this position still pushing here.
All right, well, there's our close above, guys. So I'm gonna join you.
Yes.
gonna get a 441 long. See if I get tapped in.
Let's see some pumping.
460. It might smack down. This is supply from pre-market, or not pre-market, from open.
It's been holding a trend here, and Q has, so.
Yeah, very weak trend though.
Very weak.
This trend can die at any second, in my opinion.
I know.
Like, it's hanging on for dear life to this trend.
It's crawling. It's not a momentum situation at all today.
No.
$500 on micros. Let's go. Yeah, focus on your day work because that's beautiful. $500 a day is an absolute winning situation. So I love that.
Yeah, and people like say you can't make money on micros, and I'll argue with them.
Yeah.
2 good trades with 3 micros, 4 micros, you can make that.
Yeah, especially if, I mean, I don't know how everyone feels about trade copy, but there's potential to like.
Yeah, that too.
Stretch and pull. Let's go.
Well, if I was holding those longs from way earlier, this would have been my like major target.
Yeah, this is very key. This was the resistance of the morning that INQ is back at. So now we got to see if they want to hold a break.
So it's probably going to reject for a bit here, which is healthy.
Yeah, would be expected. Great job, Mary. Yeah. Locked in some green. You can post it in Discord. We can't post screenshots in YouTube. That's
yeah,
just,
unfortunately.
When this trade closes, eventually I'll post my situation. Would love to post it green because.
Okay, there's the breakout, guys.
I know. Push.
She did what we wanted. It just took an hour and a half.
Oh my god.
And ES is struggling.
Real talk. It's gonna work. As there's a little bear push. Okay.
Let's see if they can tap me in here.
Great job, Mary. That sounds lovely. 5 to 10 minutes holding. I'm going on 84 years.
Yeah, literally. All right, we got about a little over 10 minutes till London closes. So if we think volume is low now, it might just get even worse.
Yeah. As we lose market participants. I don't know that that's going to help.
Makes it easier to move the market, though.
Sometimes, yeah. Drills it into like one session.
Yeah.
Pump it.
Yeah, it's basically lunchtime right now. Agreed. It's been lunchtime price action all morning. I'll tell you that.
Let me tell you, when we get off screen, I'm out of my office about 35 seconds later. Mary made some money on that long. Absolutely. See you later, guys. Your trading time is up. I hope you locked in a little bit, got a nice little bite, and then have a great rest of your day. If anyone has time, 1 p.m. Eastern, we're going to be back on here talking podcast about what happened last week, what we're looking at this week, trade ideas, and then taking questions from anyone who is here. So if you guys got time, if you're done with your morning session, come on back later in a couple hours.
Yeah, if you have anything you want us to talk about, let us know.
Take care, James. Good to have you.
All right, there's my confirmed breakout on NQ. It's wild how ES is just not moving.
Oy, oy, oy.
I think I'm gonna bump my entry a little bit over 450, guys. We're above VWAP. We're above morning resistance. So this should run to 45, 500, 520. 520 is my ultimate target. Over 520, it's over.
Yeah, I'm expecting reaction potentially at 5, but 520 is another level that is important.
Yeah, I'm gonna put it at 460. Let's front run this a bit. This has been the most boring price action I've streamed on so far. I'll tell you that.
This has been terrible. But I appreciate everyone hanging out.
Yeah, I'm glad a lot of you are still here with us.
Yeah. Have a good day, Blank. I'll see you in a little while.
Lunch, run some errands. Yeah, good idea.
Yeah. Some mark.
Okay, we broke out. Now we're just not doing anything again. Love it.
If ES could get their rear ending gear, I might help.
I mean, you're above 90.
I know. I just want to.
This is another breakout. We'll see if it works. There you go. All right, there's 45 on the Qs. She's doing what she's supposed to.
Yeah, she is. Let her go. Push it.
If this doesn't go now, I'd be very surprised.
I know. Well, I've said that before. Oh my God, I don't even want to look. Just make it happen.
Come on, tap me in. Let's get some excitement going on in here.
Come on, tap me out. I'm over it.
You want to get out? I want to get in.
So done. That's what happens with these long hold times is you're like,
Yeah.
Oh, it's hard.
Yep. Well, I mean, it's different if you're holding runners in profit. Then you're like, let's go. But you're just not even a TP1. It's just brutal.
Well, and everyone else is like, let's scalp that long amount. And I'm like,
yep, exactly. Today was definitely a day to play the Qs.
Yeah, dude.
So far. That doesn't mean ES might not just run all day.
TBD.
Yeah, I'm down on the 1 minute chart just to get something going. It won't run. Yeah, walking. Yeah, crawling. RQ. It's crawling today.
It's crawling. All right, I'm over it. Shut it down. I locked in that $50 green. Mary, she's probably already gone. She held her trade for 6 minutes and got $50, and I held mine for 56 minutes. 86, 96. Okay. I'm out. That's that. Bye-bye. I still support the push, but you have to go without me.
Oh, yeah.
I'm glad I logged in $50 because she's back in the red again. Okay. This has been a special Monday brought to you by BluSky and Coach Justin and Becky.
Yeah, right.
We danced.
If you want excitement, come here.
You want to? Yeah, we're working on navigating this tricky price action.
All right, tap me in. Yeah. Let me go into this last 5 minutes in a play.
I'm officially flat, and I locked in a very
tiny
profit. Yep.
What did you take on that? Like $30?
Yep. 33 to be precise.
Wow.
Because I was holding for my target. I even brought my target down to 94 based on the key level, and it just was not getting there, and it was hesitating at a level of 91, which I was watching, and so I just started taking them off at 91, and it ended up being $33 green.
Well, you're out and I'm in.
Okay, I'm gonna cheer for you now. I'm gonna cheer.
I just made $30 in 2 seconds. How does that make you feel?
Mm-hmm. I love it for you. Get it.
All right, I want to see a push over 75, guys.
Pump it.
There we go. Beautiful. There we go. TP1.
Go.
Now we need to push over 80. It might get smacked down here. We'll see.
We haven't hit. I mean, 500 is.
I'm surprised we didn't hit 500 on that last push.
Yeah, it's right there.
Now we got 2 minutes, so we'll see if I can lock in like $100 on this. Very boring stream, but I am nice and green, so that's all that matters.
Yeah, dude, I love that. Great job.
Give me this 480 push.
It still looks like, ES2 still looks like it's holding.
There we go. There's 480 TP2.
Go.
Come on, breakout.
I like your fill.
Yeah, that was nice.
Wicked in.
Yep. Nah, we got 1 minute left. I'll just take the $100, guys. All right, cool.
Locking it in. Beautiful.
All right. How are we all doing? How are we doing, chat? Everybody green? Everybody flat? What are we in? Let us know before we get out of here.
Yeah, how'd everybody do? This was a tricky morning. I appreciate you guys hanging out with us.
Very tricky.
Grab.
At this point, guys, you're looking for 500. But super green, love it. Super green. If you didn't take a trade or you're red, I hope you kind of learned how to navigate this choppy price action. Still holding long. Let's go.
Yes. Good job, Tom.
Diamond hands.
Green.
Waiting for a quick 300. Let's go.
Yes.
So you could have waited this whole morning, taking that play, 1 minute, $350, and you're done for the day.
Yeah.
Need 511. Yeah. 500, 520, and then the moon are my targets.
Yeah. 536 I have above that too. If you're
Cool.
still holding the cues.
And if you are new to our stream or new to BluSky, give us a shot. We got 50% off for new BluSky traders. Code is on the screen, BSKY50. You can get a launch plan for $30. And, join our Discord. That's where we post all of our sales, all of our announcements, get on our mailing list, become Team BluSky, and win with us.
Yeah.
But that's going to be it for us until we will be back at 1 p.m. for a live. There's 5:20. Look at that, right on the dot. Wow. Did we just get a news scandal? Hold on, guys. We're not leaving yet.
That was sick.
I'm gonna see what just happened, Becky.
Yeah, that's something is going on.
You have something to do. You're good.
No, now I gotta see what the heck's going on.
I don't know. I don't see anything yet. I'm gonna stick around for like 2 minutes and see if something pops up.
Yeah, this is very interesting. Of course, we've been waiting all gall darn day. Fading back now. Oh, it's definite break above the range on ES and
yeah, that was. So that play worked out. That play worked out exactly like I wanted it to, guys.
Yeah.
Like, I just had the scalper set on, and the stream is ending. So if you held that, congratulations. It was beautiful. I don't see any news coming in yet. We'll talk about it on the podcast if we see something. So until then, Becky, any parting words before we get out of here for a bit?
Thanks for hanging out. It's been an interesting start to the week. I love so much green posted in the chat today. Always a pleasure hanging out with you guys, and we'll catch you in a few hours.
Yep. And if you did make some money and you're in the Discord, we have a P&L channel. Post it. Let them know you're in the stream and we're all banking. Other than that, we'll be back soon. See you guys in a bit.
Bye. Hey everybody, welcome. So happy to see you all here. It is Tuesday. Welcome to Psychology Lab. I'm so glad to be here with you. I'm Coach Becky. We just hopped over from Power Hour, which is an interesting close, great conversation, good questions asked. What's up, Coach BluSky, Breezy? Welcome everyone. Welcome to the party. Thanks for being here. So you guys know psychology is my jam. I love all things trading, but I really like conversations around psychology. And for me, I'm actually like so happy to be here with you and create these presentations because it really makes me dig into what is serving me and making me the strongest trader that I can be. And so it's like a win-win for me because I am working on myself and having these conversations with you guys that ideally will bring some gem, some pearl of wisdom that will help all of us. So that's the intention of these Tuesday labs. And I am really grateful to be able to host them with you. I really want to talk about patience. And I know it's not like a complex word, patience, that we get to experience that in all parts of life, especially as adults. I mean, we have to deal with being patient everywhere to be successful and calm and have modicum of peace in our life, because otherwise it's super easy to get frustrated at all kinds of things. But I think if we could really put forth some energy and thought around having the strongest patience that we steady and let the profits lock in even faster. So thank you guys for being here. It's absolutely going to be a patience type of conversation today because nothing in the world is perfect and nothing works perfectly every time. And these are just the things that we have to learn to deal with and not get flustered over or irritated with or cause revenge trading or any kind of things that can actually derail our progress with whatever we are trying to do in life. So let's think about it from the perspective of novices and professionals. And specifically, we're going to loop it into trading very often today. So in trading in life, patience isn't just a virtue. And we've all heard patience is a virtue. It's true and it's catchphrasey, but also it's very powerful. There's a competitive advantage to people who can approach life and what they're building with a patience because you can let it unfold in a reasonable manner based on what you're building and what your skill is that you're bringing to the table. And it pulls you away from chasing quick wins. Instead, you're more trying to lock into a stable system, believing in the long-term goals, recognizing that each day is not going to make or break your end game outcomes. And so having that perspective on this is really a strong advantage when you're in a professional or competitive environment such as trading. I think we all can feel the experience of when we're impatient because impatience creates emotional decisions, and whereas patience will make you much more strategic and calm. You can wait for the right setups instead of forcing net trades. And I feel like we're more aligned. Like, I don't know if you guys have this experience, but when you're patient, you can step back, push back from your computer a little bit. You can allow the candles to present, see what they look like, allow a trade to really set up and give you the information that you might be looking for to have your entry criteria. Then you can feel the rhythm of the market better because it's a totally different approach of like sitting forward and hunting and thinking, projecting your biases on the market and then trying to get in first, versus sitting back, being patient, letting the patterns develop. And then when you see your ideal entry, that's when you get to execute. So that sort of is a very different energy, and patience is a huge component to capturing those opportunities better. So there is a phrase that I love and I use all of the time in my trading, in my life, in any sort of extra entrepreneurial pursuits, and that is let it take time. So I would encourage you guys to think about this, write it down somewhere, remember it if you can. But the concept of let it take time means that you're not supposed to achieve something today. Big things that really have the power to change your life, to create generational wealth, to elevate everything that you're trying to create. None of those things happen overnight. They do not happen in months. They take years at a minimum. And by kind of having eyes wide open, respecting the journey of that, in the big picture, That's what's realistic. And that's what's like the truth for a lot of high achieving adults, is that they didn't achieve it in year 1, year 2. I mean, in trading, in the media, there's a lot of that BS out there of like broski who got the Lambo by age 23 by following this one guy on X. That shouldn't really be the goal that we're striving towards, because it's not super sustainable. It's not common. It's not realistic. And it has a higher tendency to fall, which we'll talk about. But by letting it take time, by seeking out the best mentors, drilling into their system, back testing it, creating a robust trading strategy for yourself, and then working it every day, asking questions, fine tuning it, that is more the energy of let it take time. And then specifically like intraday, like within your trading week, these 3 things I have on screen here are really powerful energy. So waiting for your setup, right? We all know that experience of you, when you're a day trader, you log in, you open all your systems in the morning, you do your pre-market routine, you write out your general trade plan, and then you just sit. You have to be patient and wait for your setup, wait for the pattern to develop, wait for your entry criteria to trigger, wait for what you need to see to have the highest confidence in the trade. That way you're worth putting your accounts and your leverage on the line. The flip of that is forcing trades. And so you want to try and build a strategy around creating the best understanding of what your setup would look like, and then bringing patience into that. That way, when you do put your stops, put your risk on the line, you can have more confidence in that, and you can take higher quality trades because you aren't jumping the gun as readily. So waiting for your setup does require patience, because there can be early tells that a setup is coming, but by jumping in too soon, that can be a recipe for getting chopped up before the trade is fully ready. And then I do think that you can compound faster when you are more patient. LT, great question. You have Coach Matt and Coach Breezy, I think, in the room today, both of which really lead with technical labs. So I'll let them pipe in with when they're going to teach you about their setups. Today, we're not going to talk specifically about trading setups, but it's roped into this whole conversation of, as you develop your depth of planning on your trading setups, what you want to do is be pretty clear about what you need to see for that setup. And maybe if we have time at the end, I'll poke at it too, LT. But for this conversation, I want to kind of think about when you have a trading setup. For example, you're looking at a support to hold, and when price gets to that level, you want to see a certain candle pattern, either a morning star or a higher low, a break of structure up. Have that delineated in what you're looking for, and then take only those trades. And you can get the consistent gains over trying to get for outsized wins, trying to go in over leverage, just take a banger, take 20 points with 5 mini contracts and pass your account in 5 minutes. That is also a recipe for blowing your account in 2 minutes and then having to reset. Whereas if you take, a 400 point win based on your best setup that you feel really good at and reinforce your trading strategy, then if you repeat that day over day, in a week, you can have an account. And in another few days, even at BluSky, because you get daily payouts, you can be starting to take your payouts. And so that energy is so much more patient and sustainable, and reinforces what you're learning about your strategies and how often they play out. It gives you the data on your success rate of your strategies, as well as allows you to be a little bit calmer of a person. You're not trading in that massive fight or flight energy all the time. And then another thing with patience is that if you come to your trading journey really believing that you're going to let it take time, then you can have this final example here of there can be days that are not ideal for you, and you can skip those days. You don't have to trade every day. Some days really don't offer the opportunities. And so if we can accept this, preserving capital is so valuable for our system, because it allows you to not put risk on the table because you're at your chart and you want to execute something and you want to take money off the market. That is not really the best energy in order to have a powerful outcome that day. More so, the energy should be, I'm not executing, I'm not putting my accounts on the line unless I see a really great setup. And if it's just chopping around and it's not being clear to me, I want to, at a minimum, walk away, take a step away, maybe go for a quick walk, fix something in the kitchen, and then come back with fresh eyes and see if you can align and if a setup does present, instead of forcing trades. And it could be that you miss an entire day of trading, and that has got to be okay, because if you're coming at your trading with this let it take time perspective, then it's just a day. Like, meh. You don't have to trade that day necessarily. So I really love that whole concept. Now, speaking about compounding, thanks, Coach Breezy, for putting that document in the chat to you guys. You download that and check it out, when you're done focusing on patience. But thank you for that resource, Coach Breezy. So the silent wealth builder. Who doesn't want to build wealth, right? I mean, all of us. So Patience and compounding is how we can really let it grow over time and amount to a kind of a big deal. And so both, if we look at this graph on screen, you can think about both traders approaching trading. Both have aspirations to be the best trader ever, and to learn and capitalize and have giant wealth. While one can start off a little bit hotter and achieve early success and then start sliding down and can just not be able to pull out of that and focus on it and get to the higher results. Sometimes starting off with wins will create that sort of pattern where you then win and start losing and have to figure out what to do with that. The second one, the darker line that curves up, that is showing you kind of the example of a slower start, but potentially, ideally, it's a more open and learning start where you're not pushing too hard and too fast at your growing. Instead, you're treating those first couple years as essentially your time at university. Now, whether you're just paying market tuition or you're paying market tuition as well as like mentoring trading tuition at an education establishment or what have you, or through a web, a company, but allowing those first couple of years to be educating you on your best system, creating your playbook during that time, testing your theories, figuring out what trades most clearly speak to you. We talked about this last week about making your trading strategy individual to your personality, how you see the market, how you tend to want to execute, what strengths you bring to your system. So the first couple of years, if you really drill into those exact subjects, you create a stronger foundation and you can compound much more readily because you'll have so much more of a confidence in your system as you progress. So when you start with just 5% returns, they will grow over time. You can start building on that. And you're not chasing unrealistic targets or deviating from your tested strategies because you put in those hard months in the beginning to figure out strong strategies that you can trust. And you can create, through having your own playbook, different strategies that speak to your strengths and work in different market conditions. So on more rotational, lack of momentum days, there's strategies there. On strong trending days, there's strategies there. And so by creating a robust system over months to years, then you start compounding. That's where you can start adding more size. You can start adding more accounts in. And that's when this curve really can take off. When you have a set system where you can see these trades more clearly, you have high confidence in them, you have put in the work to know the ins and outs, where they're more likely to get stopped out in, what a fake out tends to look like, and how to manage that, then you can make those trades bigger as your time, experience, and confidence grows. And so the smaller returns will naturally increase as you get that skill and you get deeper in trading. You can start adding zeros to your outcomes because you are multiplying it in different ways. By taking slightly higher leverage, going from micros to many micros to a mini to two minis, or maybe 15 micros in the middle there. And then also different platforms, you can do trade copying. At BluSky, you can do trade copying to a couple of accounts because you can allow one good trade to be spread that risk wider, and your trades, one good setup can pay you in multiple different ways once you really understand your trading game. Now, this comes with time and experience. So this chart here is what I love about let it take time, right? Again, in the beginning, don't strive for home runs all the time. Instead, strive for base hits that are within your trade system that you understand. You put money on the line, you experience the outcomes, you learn them deeper in your core, deeper in your subconscious, because there is an intuition with trading. If you're not an algo, you will start to say, I have seen this trade set up 100 times. It tends to win. And when it tends to be a fake out, this is what it looks like. You'll start to catch the fake out sooner and see the really great opportunities sooner as well. And you can put a little more leverage on them. So this compounding effect is just incredible. And it wants you to be patient in the beginning. It will reward you for that patience in the beginning. I had to bring in a couple quotes from names that probably most of us know that kind of support this whole conversation and this outlook. And that is Ed Seykota. He was a very successful trend trader, commodities trader. He kind of pioneered computerized and systematic trend following back in the last 30 years, I think, was his trading career. But he was really deep into technical analysis and trends and moving averages. Well, this quote from him is, everybody gets rich in the stock market, but most give it back. The winners are the ones who keep it. So that should be our goal, right? Of not striving for the big hits in the beginning where we can post them on social media and feel amazing, but instead learn how to win consistently and keep it, which means that we're not risking everything to go hard and to get the big numbers, but instead to let it grow in time. I love Warren Buffett, who doesn't, but the stock market is a device for transferring money from the impatient to the patient. And I think if you looked up his top quote ever, this is probably it, at a minimum top 3, but it's so true. So the stock market is a device for transferring money from the impatient to the patient. This quote should have the acclamations that it does because of the validity of it. I think when you are impatient, you can have a big run, but you can also give it all back because you be greedy or you hold too long. You won't be patient with your trade management. You'll be greedy when you shouldn't be, those kind of things. So, and then Jack Schwager, he was the author of Market Wizards and all of the Market Wizards. His quote here is, the ability to be right and sit tight is one of the greatest strengths in trading. So I think that bodes to respecting the fact that you can't catch every trade. You have to be able to let the charts move, not be in every trade, not handle every trade perfectly, and feel some kind of way about it. What if there was a great trade opportunity and you were distracted? You had to take a phone call, you couldn't get in it started moving without you. Being okay with that will prevent revenge trading every time, because you can feel some kind of way about missing a trade or other people catching the trade and you just weren't available to catch it. Instead, recognizing that when the trade is right, it works with your system, your focus, your setup, the charts that you're watching at the time, you're going to capitalize on it. And that's not going to be every time. And that has to be a part of a successful system. So it's like a part of what you're building and growing. So I just really wanted to throw in some quotes that support the trading energy of patience with this. But then I think trading is a business, right? And so I wanted to pull in some entrepreneurship points to this because I really do think that we should treat trading as a business. You should have a business strategy. You should have intentions with your capital and how you want to grow and how you need to protect it and what your long game is, what that looks like, how you're going to pay your taxes on it, all the things. And so by treating trading like a business, you can hold better and have better long-term trajectory. So the start of that, right? Plant seeds consistently. So you want to launch with realistic timeframes, focus on quality, real outcomes, and knowledge building. And so that is the beginning couple of years, right? Where you are learning, you're figuring out what you want to grow and how you want to grow it and what sort of fertilizing it needs and how you can manage the seasons of it. And so you're basically tending the babies, tending the baby trees, tending your big baby business and getting the best information, figuring out how to foster it, how to fit it into your life, what you need to adjust, having some down months, some red months where you're like, what the heck is happening? Why isn't this working? And then you can pivot, adjust, grow, fine tune, figure out how to make the plants as healthy as you can. And I think that plays right into that endure the in between, which is sometimes the hardest part of this whole thing is when you've had enough success and you've tasted it, you want the outcomes, you're daydreaming, you're dreaming at night about the things that you can do with the wealth that you're building. And we want it now. Like I have been there. I want it now. I want to be a successful, profitable trader so that I have all of the money to do all of the things that I want to do in life. And I am a far way from, the annual salary that I hope to extract from trading eventually. And so enduring the in-between sometimes means something's going to go on in your life, something that is the market's going to turn and you're not going to quite catch it in time. You're going to have periods of drawdown. And so we have to build up some strength, some stamina for handling that financial strain, potentially the pivots in your system, the unexpected market shifts. Something could happen geopolitically, which I think we really thoroughly understand this year, that geopolitical changes can happen suddenly and have a big impact in the market. And so I think that this argument here about most businesses don't fail from poor ideas, they fail from quitting early is super valid for sure early businesses and especially early trading careers. Because I shouldn't say you're supposed to, but it's natural to fail in trading for a period. And that doesn't mean that you are not a successful trader in the making. And so, but to believe that in the periods of red is hard. It's harder said than done because you could be in a drawdown. You could be red for a week or two. You could have built up accounts potentially to the payout range and then blown them. And as I have done, like that stings pretty rough, especially when you're thinking about how the payouts are only 2 days away, maybe, or what have you. And then something happens, you just can't manage it. You give in to, heaven forbid, revenge trading or what have you, over leveraging. To be able to get back up as many times as you need to from that situation is what helps teach you how to not do it as often. And you slowly will start to pick the better behaviors, change your life and your choices around your trading, and have a little bit less drawdown over time if you can endure. So endurance, perseverance, resilience, Those are massive in trading in the middle few years before you really have consistent gains being locked in. And if you cannot quit early, it's a really big deal in business, in trading, in life, in adulting, just recognizing that it just won't be perfect. Life just isn't. And I think we all know that. We can all think about different things that we can parallel to this easily. And it's extremely true in trading. It's different though in trading because it's like money, like money can feel strong and powerful. Like the big winning days, you feel like you're on the top of the world, you're indestructible, you have landed on a gold mine. And at the flip side of that, where you have a massive losing day, it can feel really disheartening at a minimum. And so the endurance through those big emotional swings is something we have to really put energy to not let them take us down and not let us sway us too far from the goal. And so endurance on the highs and lows so that you can get through that requires patience to reap what we have built, right? The strong foundations built patiently can create that competitive advantage that you can't really rush, because those periods of resilience teach you how to be resilient, right? They teach you how to have a losing moment and get back up again. And then by the time you're achieving your next payout, it's like, dang, okay, so I did survive that. I did learn from that. The things that I did wrong, I talked to my mentor or my training partners about, and I'm not doing them anymore. And now I'm right back where I was, and I have better momentum and stability with me. And so being patient enough to see that through the cycles of the pivots and the drawdowns potentially in your trading career helps you get to be able to reap the rewards a little bit faster, because that experience compounds on itself. So I really love that as the energy to where we're all going. Now, we talked briefly actually with Coach Matt in Power Hour today about a parallel with physical fitness in your body, because you can really mess yourself up if you do really hard, fast gym work where you're really pushing heavy weights. You want to try and be a bodybuilder faster. You could get an injury or just really cut corners in terms of your foundation and your the way that you're doing it, who you're resourcing. Also, crash diets are similar to this too, where you want to just lose weight for this certain thing. And if you just cut down to 500 calories a day and only drink lemon juice, that might sure cut off some weight, but it's not a healthy way and it's not sustainable long term. However, if you attend the gym and you learn proper form and you strengthen your body for 5 workouts a week for multiple years, you are solid, strong. You can outperform anyone who went all in for a couple months and quit back when they were 25. Like that is not the ideal. Instead, those gradual sustainable gains create strong muscles that will hold you for years to come, long-term health, compounding results. You get quicker. You'll notice just carrying your groceries into the house and chasing your kids, you get winded less. Like the foundation changes. And so those like steady, consistent deposits over a long period, that is how you outperform people who are rushing and potentially have a significant injury from that. Or, you do the crash exercises and diets and cardio. And then, 3 months later, you are right back where you started. You gained everything back because you couldn't hold that momentum. So if you can get in a pace that fits with your life and your goals, that is so much stronger too for longevity. But that requires a patience. You go to the gym 4 days a week, 3 days once, 5 days the next. You do your best. You have a busy life. 4 days the week after that. It might not seem like you're doing enough. Maybe you only get a 45-minute workout in on those days. And it's like somebody else does a 45-minute workout and then runs for 2 hours. And like you could feel some kind of way like you're not doing enough. But if you do what you can do and you get it in more days than not each week, at the end of a year, you'll be leaner, stronger, faster, steadier, have a stronger foundation for strength. So similar to trading, where if you just try for those home runs, you make accounts, you blow them out of the water, you pass them, then you continue that momentum, you get a payout, and then you blow it all. So you've paid all those fees. Then you're resetting all of that and you're figuring out how to start again. Versus the person who just showed up, got the base hits, asked the questions, adjusted their strategy, journaled what happened in that day, was a little bit stronger the next day. At the end of that year, they're going to pay a heck of a lot less reset fees. And they'll generally have a stronger, steadier equity curve that is slowly curving up because there was more focus placed on learning and smart trades versus home runs and big money. So the parallels for me are really powerful, and it can create a visual in your mind. I don't know where everyone's at with their fitness or diets or whatever, but most people have done a little bit of adjusting their personal weight and strength. And so this kind of
Makes a lot of sense to me. So the frustrating reality is that sometimes the outside world makes this really hard. And I think that this is very true. And you're going to feel pressure from all kinds of things that is going to make you want to be less patient and less calm, less stable, and less able to stay chill. So, market conditions, for starters, right? Market conditions can shift, like we were just discussing today, too. Speaking of tomorrow, about bear market versus bull market. Are we in a pullback, or has the market shifted and we're in a bearish market for the time being? Well, that question is out there because we've seen some breaking of some levels and we're dancing and it's not clear. But what is clear is that we're having high volatility days and we're debating this issue. And so you kind of have to be really careful and cognizant of what is being presented. Who is the stronger force? And it will change week to week, day to day. Is there still liquidity in this and that? And does it feel the same? So does something that worked last month still work? Not necessarily every time. So you have to constantly adapt and think about your strategy. If it didn't work, if the setup was an A+ setup last year and it was killed twice this week, I tried for the same setup and it didn't work. Why? What happened? Who should I ask? How can I adjust? What can I backtest? What might have shifted? Asking those questions will help you get through these external forces that are potentially challenging the situation. Similarly, the unexpected news, I mean, that has definitely been a factor with the recent changes in world economics as well as just US based, because geopolitical events, news drops, the tariff influence, potential war, economic data that is coming out that maybe comes outsized to what we're expecting. The big businesses that run the indices can have significant company news that sometimes was not anticipated. So, there's going to be disruptions to what we're trying to do. And so having patience during those periods is actually really hard. So knowing that things like that will happen and it can derail you is something to have to prepare to, whether you're building a business or it is trading specifically, especially trading specifically. Knowing that that can happen and it can really cause a hard hit if you're in a position potentially, planning for that to be a part of your strategy is really helpful, because you don't have to have that be a personal affront, basically. Recognizing that the external forces can derail you temporarily, and that doesn't mean that you're not still steady and strong. And what you have learned thus far won't hold over time, but more so that maybe something is going on that I need to think about hard and how I might adjust from that. But it doesn't mean that my trajectory is really much different. Could mean just a little bit of a pause in what you're doing. Similarly, seasonal patterns, right? Earnings cycles, you want to be prepared and know if there are big earnings that are coming before or after market close, because maybe if you're holding a position that is on that ticker or highly influenced by that, such as, some of the big businesses that are in the indices, the months that are the quieter, the sleepier potentially. So like in the summer months when there's generally a lull. So maybe in those times you want to expect smaller ranges, things like that, where you can adjust and you can't control them, but you can adjust, you can anticipate them, you can try and study them, you can ask your friends, be a part of a community and throw it out there of like, what is happening? Why are we seeing XYZ? Asking these questions will help you get to the answers quicker. At least have a good dialogue about it that maybe will give you a little light bulb moment into your personal experience or to overall understanding of the market. I think that, having the conversations around these and knowing that they don't mean that you're necessarily off track for where you're going, but that they are going to be a factor that might make it a little bit harder will help when they come to normalize that in your brain, that it's okay. I think this bottom here, most successful traders don't resist market conditions, they flow with them. So if you can't change it, letting it go is ideal. Focus on what you can control. You can control a thorough preparation for your trading. If you know you're coming in for your trade day, you can spend the time to really create your trade plan, draw your levels, think about it, do some nice steadying rest. That way, when the charts do start to print, if we're in a little bit of a different condition, you are at least at ideal control, patience, peace when the candles start to print. That stronger, steadier base will always give you a better day. It will always start you in a little bit of a stronger, more stable position to sort out what the heck is going on. Because we are choosing to work in a volatile environment. And so having that strong preparation behind us is so helpful. And then, of course, What we can control is our risk management and our execution. And how you do that is by doing the back testing, by having a strategy and a playbook that says, in this setup, I like to put my stop behind this 5-minute candle because I have seen that will hold most of the time if the trade is ready and it is moving, which is my trade plan. That's my assessment of the market right now. This is how I'm going to manage it. And let's say we're in a situation where volatility is really high. Maybe some unexpected news did come out, such as the tariffs of last spring. The numbers were printing really fast and the candles were outsized what we had seen through the winter period. In that situation, a lot of traders that I know, myself included, downsized. If we were trading 1 or 2 minis, we would trade 4 to 8 micros in that situation, because it was like, dang, my accounts are not the size to hold the risk of a 5-minute candle, but my strategy is that setup. So you can leverage down in that moment. And that is a way that you can control your risk management when external forces are potentially trying to throw you off your game or put you in a situation where you're risking more. When you're risking outsized to what you're used to, you're going to feel some kind of way in terms of those dollar signs being thrown around on your P&L, and you will slide into fight or flight faster. When you slide into fight or flight, you're just not as logical. You don't manage the trade as ideally per your information, per your back testing, and you're not going to have the best executions in trade management if your leverage is too high. So I love this point of controlling what you can control and letting the rest go. If you see that the candles are printing in some kind of crazy town way that you don't understand, isn't in alignment with your system, you don't enjoy, the choice there could be to just not trade that day. If you can't control it, you don't like it, it's not your setup, let it go. Recognize that your system is for the next 20 years. And so if this day doesn't feel it for you, then maybe next, thank you next. Bye-bye. Closing system, moving on. Ooh, I'm going to take this question quick because I only have like 2 or 3 more slides. Trendy Trader, what are your thoughts on passing evals quickly, being aggressive, over leveraging, taking more trades than you would normally to get from an eval to a funded stage? Then in funding, switching to your idea of long-term growth. I know it depends on trading ability, experience, financial situation. Just looking for your thoughts on the idea, worth it or not. Okay, so I don't know a person who trades prop funding companies that hasn't considered this exact question, Trendy. Like, I think it's a great question. Is she still here? Are you still here? Your name's not on the thing. But I will definitely let you know my thoughts on this. And my thoughts are how the habits that you train yourself to execute is going to be what you do more often, is my short answer to that. If you start your new evals, aggressive, heavy contracts, you want to pass them in the 2 days. That is the minimum required for consistency. I get that energy. I have dabbled in that myself, and it will get you to the evals quicker potentially, but also can get you blown them because you're trading higher leverage. What I have found the most successful for myself is to try to always just execute for my strategy the best way that I can. And so that generally will mean I'll pass an eval in 4 to 6 days. And I think the reason why I do that and why I would gravitate towards that answer is because I want my habits that are ingrained in my subconscious and my hand wants to click through to be in alignment with what I have seen get me to the best outcomes. And that is a little bit slower and a little bit more steady. And now I have at times traded certain volatile moments with like 1 or 2 evals and, kind of been into the volatility. I think that's a personal choice. But if I have accounts that I'm really trying to grow in general, I think that creating the habits that you want to trade long-term, I think is the most strong strategy for letting it compound over time, because those 2 days versus 6 days, when you're getting an eval passed, is it worth it to make your habits inconsistent in order to get the eval 4 days quicker? For me, it is not. For me, I would rather be really steady and locked into my system and let it take time. I think that is the most consistent for the long-term steadiness of your accounts. So that's what I would think on that. Great question. And thank you for typing that. Okay. So the danger zone of forcing outcomes. Oh my gosh, look at how that played right into this next slide. I'm so glad I read it. So this is the kind of the counter to that conversation of trying to push harder and faster at trading. And that is this risk of blowing your accounts. So chasing losses, when you get into the revenge trading, it's really easy to do because losses suck. It's like someone calls you a name and it like fires you up a little bit and you want to fight back and the whole situation gets out of control. That's like revenge trading, where your accounts could have been steadily growing for 5 or 6 days. And then you can like take an affront. You had a really good setup and it was stopped out, and you cannot be okay with that small loss and get into chasing that. What I call is fix it mode. I call it that because I've done it and I feel like I need to fix it now. Sometimes I can, but sometimes then I am trading in fight or flight and I am pushing my luck and it doesn't go well. The statistic out there is 70% of new traders blow their accounts within 90 days, mostly from impatience. That is the trying for the big wins and pushing it as fast as you can because you just want to get to the next stage. You recognize that an eval is an eval and it's not going to pay you until you get it to the next level. If I trade 3 or 4 minis instead of 5 to 8 micros, I will pass it quicker. So I want to flux my strategy to pass it faster, but then that is an impatience. And that is taking on more risk than your strategy generally supports. And so it will blow accounts faster. Strategy abandonment is jumping between strategies before you allow time for them to work. And that is really hard for consistency. I think that this phrase, no edge works every day. I think that is true. And that is what I have found. That was a discussion today versus where we were talking about the market structure today of we have been making higher highs and higher lows on the 50-minute chart since we bottomed out in the early morning. And so there are long opportunities, but not every day is it going to keep making higher lows. Some days it's going to just fall back and settle in and it didn't have enough of a push in it that day. And so to have a playbook that is a little bit more robust, to be able to see two sides to each coin, recognize that each trade is not going to work each day, and to try to have a few different strong strategies, but don't throw one out. What if you were trying for the trending trade today and you went long on a reasonable place for a pullback and it didn't hold and it stopped you out? But another day that trade could have worked beautifully and it could have run up 20 points after where you got in. So to say that the trade that you were trying for with the long on that pullback was not a good trade, I don't think that's fair or accurate or reasonable. And you don't want to throw out that trade. You want to say, if this trade didn't work on this day, what was unique about this day? What can I learn? Do I need to adjust anything? What could I have caught that maybe this wasn't the trade for this day? Or maybe it was just the variance of what happens, that not every trade works and there's a probabilities to it. But to have that trade plan still be in your playbook because it's valid and it works a lot of the time is a strong choice versus saying, I don't like that. Somebody told me that. I read about it on Twitter. I'm going to find something else because that guy didn't know what he was talking about. That approach will prolong your journey because you're hopping strategies and you're not really taking the time to dig into what makes one really work and what are the conditions where it doesn't work. When is it better? When is it not better? What else could I do on this day where that one maybe wasn't ideal? So I want to pivot to this other one. So you can kind of create a stronger, wider foundation, but don't throw out the baby in the bathwater kind of story, right? And then opportunity blindness. So if you're impatient, you start to see trades everywhere. But if you could calm down, not every potential setup is a good setup. Now, I've been guilty of this where if I'm distracted or I only have an hour trade in the morning, for example, like today, there's a lot of time where I can really only be focused and wholly involved in my system for the first 45 minutes of the day. And if I can't get a trade in during that time, like that can feel really frustrating to me because I want to lock in a good trade. So in that mindset, when I come to the chart in that mode of like, all I have is this time right now because the rest of my day is bananas, it's an easier opportunity to force a trade that potentially isn't a great setup. And so I have had to do personally a mindset shift in those opportunities in those days to saying, I only have this ideal time. So maybe I won't trade today. Maybe I just won't see a trade that I like. And that's okay, because that is better. It is better to not execute because I didn't get a really good setup versus just executing because all I have is right now. And I want to like throw some at the wall and hope it sticks. Or, even I see a B setup, so I want to take it. I'm getting more picky the longer I've been in trading, and I really want to see certain things. And that will help me, not give into the impatience of I want to lock in a trade and I'm just going to throw it at it. Instead, calming down, is it a potential trade that is worth it or not worth it? And so having that kind of maturity with, I can be patient, this might not be my day, is a more ideal approach to this. So I kind of wanted to just spend a minute here to talk about how we can do what good habits would be, what good habits to lock in our trading day for our most ideal outcomes. Because this is like the biggest slide of the day. This is how we put patience literally into our trade plan, into our trading day, what we need to choose to do each day to get us to the most ideal outcomes, to train our habits in the best way that they are the most strong for sustaining us long term. So those would be delay each trade just a little bit. And so for this first part, no trades the first 10 to 15 minutes. This is personal. Everyone is different with this. If you were trained to trade market open and you have a really strong strategy after the first 5-minute candle per se, maybe this is 5 minutes for you. Maybe this is 2 minutes. Maybe this is 30 minutes. I would say that this number on this first bullet point here is personal and it's based on where your strategy lies. But to have some rules around that is smart because the first minute or two of New York Open, there tends to be some whipping around sometimes, some outsized moves. So, that's a choice to be in right at open or not, but make a system around your most successful trades. If you journal your trades, like say I got in at 6:37 Pacific Standard, 7 minutes into New York Open. That trade was this setup. It was a naked point of control setup. I faded the extreme after the first push and it won in this amount of time. So that data could show you over months and months and months that around 6:37, 6:38, 6:39, I have a high success rate. But if I get in at 6:32, I tend to get stopped out. Maybe if I let that first 5-minute candle close and get some more data behind that, my ideal setup really does come after that time. So I could implement a rule like this, feel it out, see how the data supports that long term and adjust. So delaying your trade just a little bit for your first trade to allow the information you need for your trading strategy to print, super helpful. And then also this next one is one that I sometimes am wishy-washy on. Don't tell my mentor, but no trade until you've written your trade plan for this session, which I love because writing out your trade plan, saying, I see this on the daily, this on the hourly, this coming into market open. This is what I think will happen. I am slightly bearish bias for XYZ. Writing that down, saying, if this level breaks, I think we're going to go to this one for my first target. My risk would have to be on the other side of this. Writing it down either in a document on your computer or handwriting it kind of helps slow you down by taking the time to get it from your brain out somewhere onto a document, slows it down a little bit and makes you think about it more strategically. Makes you think about what you would need to see to entertain a trade, and it cements your plan in your head a little bit more. So then you can't be as jumpy with your trading, not saying I see this and I want to go long because I see bulls. Instead, it makes you strategic. And so I love the idea of writing down a trade plan. This can be really elaborate and an entire page, or this can be 5 lines that are freehand with abbreviations. Whatever you can see, read, understand, speak to, but makes you slow down and think about how you want to do your trade, I think is really helpful. And then the box breathing that we've talked about before too. When you think your trade is starting to set up, 1 or 2 rounds of deep box breathing will basically just calm your system down a little bit. I think we've all felt a little bit of the adrenaline hit when your trade is starting to set up. You're like, that whole feeling of, it's starting. I see it setting up. I can't wait to get in. I think this is a really good trade setup. It's doing exactly what I wanted. I love what it's printing. I want to be in this trade. That is an energy amping. Your respiratory rate is climbing. Your heart rate is climbing. Your hormones are climbing. Your neurons are firing faster. So this asking for 1 or 2 just deep rounded breaths can counterbalance that a little bit and help you lock into your focus so you won't get faked out quite as quickly. So I would say try to do these things to just delay your trade just a little bit so that you make sure that you're really locked into your plan and you're focused on your data so that way you don't get faked out as much. And then what about this, you guys? Speak your trade out loud. So this is really helpful for staying patient because you're like checking yourself. And it doesn't have to be, I don't know, people feel weird about this, but I've heard many successful traders do this. And if you're physically in a room with someone or you're on the phone with them, whatever, it helps to say it out loud. And it can just be you alone in your office or at your computer, wherever you trade at. This is my setup because it is holding along the support level. It caused this big buying up wick. And if it breaks this next high, then it really supports my bullish entry off of this level. Saying that out loud, you're like reminding yourself what I like to see, what printed, what evidence I have in front of me to validate my trade. Also, my protective stop is here because my system allows me to hold a 5-minute candle risk. This is within the parameters of my account. I have 8 micro contracts, so I can only take this much risk, XYZ. By saying my protective stop is here because these rules of my system, you're less likely to move it. And moving a stop is like one of those cardinal sins of taking on more risk than necessarily you should. And so by verbalizing out loud, my protective stop, not my stop loss, my protective stop is here because XYZ, it's way less likely to move it. So I love that one. And then if this loses, my plan is off and I'm okay with this. I don't know if you guys do this, but when I enter a trade, I like to remind myself of I'm entering this long position because I think this level is holding. My analysis reads that we are getting the buying momentum off of this level. And so we should be moving up from here. We've had the retest, we've had this candle, this pattern present, this supports my trade plan. So I think that we're going long from here. That is why I am putting my capital, my accounts on the line. So if this trade loses, if my protective stop is taken, I am okay with it. And by verbally, mentally, emotionally accepting the loss as a potential outcome, that is more sustaining for not revenge trading and not moving that stop loss, not dollar cost averaging and pulling your risk too low. That helps just remind you of what your business is, how you manage your risk and what your intentions are. And that if it stops, you're stopped out. And that is the outcome. And that is a healthy choice for account stamina, like for trade longevity. And so I don't know if you think it's silly or not, but try it with yourself. Try seeing it out loud. When you're thinking about your plan, you're writing it out, you're considering how you're going to manage it. Just take a moment and say it quietly. It can be quietly, so no one outside of the space that you're in has to hear you, but it is a reminder to yourself of who you want to be in this trade management and how you're going to manage your trading business for this trading session. Then mid-session, pause alarm. So this isn't a tactic for if you are a person who stays at your charts all day and you have that ability to consider trades throughout the whole day. Have a timer that goes off every 45 minutes, potentially intraday. And when that timer goes off, you just stand up and you step away from the screen. You ask, am I trading my plan or my feelings? Am I still at my charts because these are my ideal times? I like the setup. Maybe you're hanging out with us in the live stream, but are you still steady? Are you still focused? Are you still tracking and want to, wait for your best setup potentially? I think it's a good reminder that when we have like these long chunks of time for trading, to make sure that we are pacing ourselves, certainly at some of these, one or two of these alarms that could go off, you could get some food, get another cup of coffee, get some water, take a short walk, take the dog for a walk, maybe break it up a little bit. That way you can help keep your focus. I mean, staying hydrated and putting a little bit of protein in your body is really helpful for just your mental functioning. Your neurons fire faster and smoother. So I think this is really helpful for those traders who like to trade hours. I would encourage this to help you have patience because it can kind of, offer a little reset or a little break, a self-check moment. I think that patience isn't about waiting longer. It's about inserting space between impulses and actions. So I kind of love that whole concept of it's not really like you think about teaching your children patience. Well, that's like you're waiting line at the grocery store. You just have to wait. It's not your turn. There's a lot of people. It's peak grocery shopping hours. I'm sorry, kid. I don't want to be here either. We have to stand still and not touch every candy on the rack. That's not exactly the patience necessarily in terms of trading. More so we're at the deeper levels of that where there is impulsive trading. We all know what that looks like. You want to slow that down. We want to purposefully put patience into our system so that we don't feed into every impulse. Instead, we're taking actions based on ideal setup opportunities that are worth our risk. And if we can put some patience in there to slow that impulse reaction down to make sure that it really is ideal for our setup, that is powerful. That is the power that we are talking about for establishing a strong foundation and executing on your best trades long term and allowing everything to compound because you're not giving in to every impulse. Instead, you're checking yourself before you wreck yourself. It had to be said. You're checking yourself before you enter into some business that maybe isn't the best. And so that's where we want to really put our patience on. So moving forward, rounding out for today, I think progressing as traders, it's so important to build strong fundamentals and really let it take time in terms of mastering your basics, creating a trade plan, collecting the data on what you execute, what you see, how you got in, what time of day, how long the hold time was, if it rallied for 100 more points after that and you should have stayed in. Let your early years as traders build a strong foundation and agree with that, right? Don't try to force it faster. Don't try to press the results too quickly because then you could miss subtleties that are going to make you a stronger trader in the interim. You can miss little ways that you can make each strategy more robust by paying attention to what happens every execution on that strategy and what went well, what didn't go well, how you could maybe adjust that going forward. and then having a consistent daily practice around that, that allows it to build, that allows the small steps to compound into mastery, so that you do recognize this setup that happens, twice a week, what it looks like and how to capitalize on that better. That way, in 5 years, you can be a master of that strategy. You can see it coming a mile away. You could be set up, you could be patient, you could set alerts on what it would look like for that setup to be ready, and then come and execute on it with full strength when it comes. That's the goal, right? That's the goal of becoming a successful trader, is learning the ins and outs and the depth to our strategy. That way, when we see it, we can fire full size and really make it count for our financial and life goals. But then beyond that, I have to say, psychologically, embrace the journey, let it take time, not only to have the most robust system that is stronger and has a stronger base, but also let your body keep up, let your body and your mind and your emotions come on board with the fact that you are throwing money around on your computer and becoming a powerful, wealthy trader is the goal, right? That's not going to happen overnight. And we also want to enjoy the time and let the discipline compound, let those workouts build a strong body where you can finally see your biceps by summer or whatever. It will make it more enjoyable, and you can have a little bit more patience with it, because taking a loss on 8 micros versus 2 minis, you might have some emotional carryover on a full size loss depending on your size. And if you're having massive losses more often, it's going to be harder to enjoy life, to enjoy where we're going and how we're getting there, and our family in the evening. If you've had a big loss that morning, but you have a family event that day, I don't know about you, but I have gone into an evening some kind of crabby based on my morning trading, and I don't enjoy that. And it's not really fair to my family either when there's that carryover. So for me, leveraging down and allowing patience helps me stay sane. I think it will help us all stay sane, where you can still have a lovely evening with your people, but not have a huge carryover. And it's this whole approach of, it's okay, it's just one day. The big days are awesome. The red days are a bummer. They're all just building you stronger. And so it's all fine. And what are we doing next? Kind of shut down the trading day, let it take time, enjoy the evening as well. Because I think we allow the process to unfold. I love that. The best outcomes come from those who give their process time to unfold. And so this is sort of the process that I would like to encourage. I know everyone's different. My jam here at BluSky is the trading psychology.
Episode of Market Skycast, the official podcast of BluSky Trading. Now, I am Justin, and once again, I am here with coaches Matt and Becky. Thanks for joining me on this interesting Monday. How are y'all doing today?
I mean, I had kind of a weird morning, not gonna lie, but I pulled it together and we are right now.
How about you, Matt? Have you been looking at the charts this morning? It was an interesting day.
all morning long, my friend, all morning long. It's been a fascinating doji today so far.
Mm-hmm. Now, guys, before we get into it, we are live on YouTube recording as we do every Monday. So if you're watching this recording and you want to watch it live, interact with us in real time, make sure to tune into BluSky TV on YouTube. Now, just like we have for the past, 3.5 months, we're going to start the segment talking about the conflict in the Middle East. And I don't know about you guys. To me, it's just starting to get ridiculous. But I'll let you guys start. We had news today. We had news before the weekend. Becky, how are you dealing with this?
I mean, okay, so I know, like in the back of my mind, I'm waiting because the world has periods and areas that there's some instability. And so in the back of my mind, there's a couple key areas, obviously, that I'm waiting to hear if there's important news that could cause a catalyst, could impact us at any point. That given that said, this morning I had a solid trade plan coming into market open and my levels were drawn and it was moving smoothly. It was having a setup. And then we go to get on live and it just falls out the sky. And I'm like, come on, I was so ready. So it's like those rapid moments where it's like the news just hits and you're like, oh, okay, let's just see what happens. Let's watch the levels. Let's see where it's going to find some sort of a pause moment at and repivot. And so it's that constantly like, you got to stay flexible with this market and pivot to the data as it comes. And that definitely was a factor today. And it's kind of always in the back of my mind. Case in point, market open today on Monday.
It was actually really funny, Matt. Becky and I were sitting here. I was like, okay, do you have your plan for the day? I kind of have my plan for the day. I went and got a cup of coffee and I hear, what the? Then I come back and apparently, the Iran news. And then Becky just goes, well, my pre-market plan's out the window. And we just literally hopped on like, guys, we were just talking about how we had a plan and we need to reevaluate. But it was funny. Do you want to tell Matt about your trade this morning before we move on?
Oh my God. Okay, so it's just ES. Put on ES because you traded in Q and I traded ES today,
Yeah.
and it fell down into my support area from last week. And I was like, okay, this is all right. Like we fell down into demand. I feel good about this. And so as it was dancing there in the morning, I started getting into a micro position on my ES play. And I think my fill was, oh gosh, it was so long ago now. It was around like 87, I think, was my average fill. And so you guys, it literally danced in and profit, out of profit forever, for all of the time. Like it was like, I don't even know, over an hour and a half that it was pinging around, dancing around. And finally I was like, I just cannot even, like Justin was scalping, grabbing a couple hundred here, a couple hundred there. And I was just like, I'm still in. Yep. No, I'm still in. So finally I just scratched it for a small win right before she popped.
Right here.
Of course, he decided to start rocking, huh?
Yep.
I
11:29
trying to hold longer though. Like you're holding through a little bit of chop these days. You're trying to catch a little bit more trends. I do like that philosophy.
Well, and then when it broke, finally, I was like, So I took two more longs and I actually held it. My target all morning was 76.05, which was not aggressive. Like, let me tell you that per the normal range of ES, extremely likely generally. So anyways, finally I did end up holding. I got out at 76.05, like 10 minutes before the hour just now. And I was like, okay, now I feel good about this day.
Yeah, I was cracking up because I'm like, I hope it goes, but I don't want to touch this at all. So it was hilarious. Now, Coach Matt, like, what do you think about this flip-flopping news? Does it change your mind on anything? Are you trading any differently? What's going on?
No, I don't think it changes my perspective on much. I mean, on Saturday, we got news that the president was going to send back his red lines regarding where they were on the agreement. We had some information last night that there was some sensitive negotiations. And then obviously this morning, Iran walked away from the negotiations. And I woke up this morning, guys, and probably while you were going through your process, that was the first headline I saw today was Iran walks away from the deal. And I'm like, this is before I saw any chart, any pricing, had any context for what the market was doing today. And I'm thinking, oh, wow, we probably got some volatility on that. I mean, it's one thing to see more talks, red lines this, red lines that. I mean, those are normal chatter we've had over the last couple months, quite frankly. But Iran walks away from the deal. Iran walks away, like that was a big headline And I immediately went in, pulled up my chart, and I'm looking at a 5-minute candle, and I'm like, oh, we got smacked.
Yep.
And then I'm like, okay, bring out the context, pull out the daily chart, and we're dojing. And what was interesting was on that headline, I think it's very telling about where the market is regarding the Iranian situation right now, because it is discounting anything that does not lead to an ultimate positive conclusion right now. Because you see a headline, Iran walks away from the deal, and you get a 10-minute sell-off. Like that's it. That's it. That's the only thing the bears can muster here is a 10-minute sell-off before bulls step in. Like you got your headline, you're in an overextended situation on the daily chart. The average yield on the daily chart right now is right around 400 points and right around 9 sessions. Currently, we're at 250 points over 8 sessions. And so you're kind of in an extension there. That's every reason in the world for the market to pull back. And yet the market pulls back right into NVIDIA news that they're getting into the PC market. So like, pick your poison. Which one's more important, NVIDIA getting into the PC market or the yin and the yang on the Iranian saga here today? I kind of like the NVIDIA news. So
I mean, it's like you said, the market's discounting anything negative and anything positive they're exploding on. And you know what? Like you said, 10-minute sell-off for news like that, it still blows my mind that that's all we got.
I'm surprised on the headline versus the pricing, honestly.
This is why I always lean into, like, I got to pay attention to all the news, but I got to lock into those technicals, because this morning in live stream, I was like, we fell hard and this news is not great. The backdrop is concerning for potential bears, but I'm sorry, we fell into demand and demand is holding. So that's why I held that long too, is like, I'm like, this was a sell-off from a catalyst, but there's not follow through. And where we fell at to was a key area for me on my larger time frame. So I can't short this anymore, despite that concerning news, because like demand is holding. And so that's where, like, I feel like having a strong technical and a strong setup understanding of the market is the powerful stance to put into any situation that is going on behind the scenes, because demand and supply, like those have got to be a factor, even in the backdrop of news.
I got a question for you guys. As an active trader, both on the day and the swing side, pick your poison, which one you want to talk about. How much does the Iranian geopolitical situation and the ongoing negotiations play as a role in your decision making as a trader?
I'll let you go first, Becky.
I think it's you know, how much? I guess it's a factor, but it's not the main factor. For me, the main factor has to be technicals, and it's in the backdrop. It's, you know, if technicals are 100, maybe that's like 30 to 50, depending on the news. So it has, and to be an A+ setup, they have to kind of fit together. That's when I'll size full size. Like this one, I kind of inched into because I was like, this could definitely, the catalyst could hold and be more forceful.
Totally understand that.
Yeah. So that's me.
What about you, Joe?
For me, the news I don't care about. The reaction I care about. What I do is I take the 15-minute news candle. That's my range. We're going to chop until we break that range. That's where you take the continuation. And if you're looking at the NQ, 460 was the start of it. Once we broke out of 460, we ran another 100 points. So I don't care what the news is. The news is just going to take us to demand for the next leg up, in my opinion. So if I'm in a trade, I have the news up, but I'm protected. If I lose, I lose. If I'm on the right side, I win. That's basically it. What about you?
You know, last week I took it into account more. I didn't feel like there was a lot of economic news. There wasn't a lot of corporate news. And we were in that mode of 2-day negotiations. The president was coming out suggesting very strongly that there was some degree of parameters of an agreement, that they were 95% there. And so I felt like last week, it certainly did play a role, and more from a position sizing perspective on the intraday side. It's just kind of like Becky said, to just barely on her trade. She really liked it coming into her demand zone. She had a lot of confidence on her level, but it didn't sound like she had confidence on the environment because of that news. And so did it change the fact that she was trading? No, it only changed the fact that she took a lower position size in that environment. And so it definitely played a role for me last week on any intraday side, because I felt like there were landmines called news updates last week.
Yep.
I do feel like that's going to be the case early this week, but as we go into tomorrow, the next day, there's other important conversations this week. We get a lot of economic data this week that is important to the market. And we also have some pretty important earnings this week that I felt like there was some interesting earnings last week, but there wasn't like a major market catalyst. You kind of have that this week with Broadcom. And so I do think as we move into the week, I think the Iranian headlines are going to be a little bit less sensitive to the market. And I don't even want to suggest they were that sensitive today, because you could easily just describe today on the ES as you violated a support and you went down to the next level of support.
100%.
Like, easily describe this as a technical event here today. This like when I look at the pricing today, and if I didn't know anything else that was going on, I'd be like, oh, a minor economic report came out and it violated an intraday support level and it went down to the next intraday support level. Like, if you did not know there was a bigger conversation going on, the market's not telling you there's a bigger conversation going on right now. And I mean, especially when you pull it out to the daily chart, we're talking about a slowing momentum doji right now.
Yeah, that's a great point. You could have not known what's going on and it just looked like another normal day. Now, you mentioned that you kind of paid more attention last week, and we talked about this. There was no economic data last week. It was a short week, and we made some predictions that we might get some trends. Like, we wanted to hop in, catch a trend, and I don't think we could have been more wrong, because last week was very choppy to me. I know Becky was loving these mean reversion traders. Did that surprise you guys at all?
I think it still was bullish. I mean, the candle last week on week was bullish, but in intraday we did see more chop than we had been seeing. Like, we previously, there were more trending days, and last week there was plays in both directions. I mean, it did end with a bullish energy, but I do love some mean reversion, so I was not mad about the week, not gonna lie. But some slowing momentum on the larger time frames with some of those days we had last week.
Yeah, absolutely. What about you, Matt?
As we get a little bit extended from the flag that got confirmed on the ES, you're up about 8 days now. I expect momentum to start slowing down as we get extended here and we form secondary patterns. So I think you could describe the environment very technically right now. That's kind of, Becky said, that's where your focus is. That's where my focus is as well. And so am I a little surprised we didn't get a little bit more ump last week? Maybe a little bit. I was expecting a little bit more. But again, the market had a decent week last week. I don't want to describe it as the market had a bad week. It was choppy on the intraday, 3 out of 4 days. Intraday. Like, the intraday chop was really very real last week. When you come out to the larger pictures, the daily chart, the weekly chart, like another day that ends in Y, quite frankly. But on the lower time frames, Tuesday, Wednesday, and Friday were all fairly choppy last week.
Yep, especially Friday.
Yeah.
Now, we did have some earnings. I don't think there was anything major that's stirring the market. People were talking about them, but there were some earnings. So Matt, give me like your top 3 earnings that you want to kind of just rehash over from last week.
Yeah. Can I go? I was going to say the good, bad, and the ugly, but I got 2 good ones and 1 ugly one. So however you want to paint that one.
It's up to you.
But I'd say, okay, the 2 best earnings reports last week, in my opinion, were the Informer, Snowflake. I thought Snowflake was absolutely outstanding last week. They got a gap up situation, and obviously now secondary patterns do play, but this didn't hesitate at all. It gapped up, ran away from the gap, a little bit of a runaway gap situation. I thought they had a wonderful, wonderful report. The other one was Dell Computer, which can I give a little bit of shout out to Goldman Sachs from a pure sarcastic way here today, because they reported last week wonderful earnings, gap up situation. Literally, we're talking about a stock that's went from like 230 up to 460 in no time. Goldman Sachs comes out today and they're like, all right, guys, listen, we got a major update here. Everybody look at me. Everybody listen to me. We're going to upgrade the price target of Dell to 500. This is the equivalent of a day trader chasing a momentum pump. Goldman Sachs upgrading a price target that has already been achieved is quite outlandishly brave there, Goldman Sachs. But I thought Dell had a wonderful report last week as well, and they're getting a little bit of secondary love on NVIDIA's news here today. But on the negative side, one of the stocks that I felt was really important to understand kind of the overall health of the consumer, which is a growing debate in the market, I would say, is the health of the consumer. We know 70 to 75% of the American consumer right now is kind of paycheck to paycheck, struggling to even afford $1,000 non-discretionary situation. We know the inflationary situation is starting to creep into outside of just gasoline and the overall impact on the Straits of Hormuz. And so there was a report 2 weeks ago out of Walmart that showed some concern on the consumer. Costco last week was another report that I felt was extremely important. And they just lowered guidance and did not bid. And this was a little bit of a momentum juggernaut, now turned around pretty aggressively. And so I thought two on the good side, Dell and the Informer, Snowflake, and then one on the downside, very negative pricing here would be Costco.
Yeah, wow. That's pretty interesting. Walmart and Costco down, AI up. This is
well, and Walmart's at the 200-day moving average. Costco's going to be there fairly soon. And so yeah, they're both leading companies on the health of the consumer, both telling us, hey guys, we got some concern on the consumer. Just to give you an offset of that, cheap dollar store, Dollar Tree, skyrocketed on earnings last week. So apparently consumers are liking Dollar Tree, but not liking Costco these days.
Oh yeah, look, interesting market to be a trader in. Gotta love it, right? Now, before we move on to what's going on this week, we did have some NVIDIA news. Did you see it? Are you kind of apprised of it?
Oh, absolutely. NVIDIA had some very interesting news here today. They came out and they announced that they're getting into the PC world. NVIDIA's powerhouse is not personal computers. NVIDIA's powerhouse is the GPU infrastructure build out regarding the data centers. And so if you're going to build a data center out there, which every sovereign government is currently doing and encouraging their corporations to do, you need NVIDIA chips to power that. Well, NVIDIA came out and said, well, we're actually getting into the personal computer business and we're designing a chip that's going to be specific to that. And then they're going to work in conjunction with Microsoft to have Windows be the backbone of that new chip. And so Microsoft, NVIDIA, both in conjunction with one another, and their anticipation is this is going to be an AI platform, that your personal computer will be designed as an AI platform that will be basically your personal assistant to help you do everything you personally do with your computer. I thought it was fascinating news coming out of NVIDIA.
Smart.
I think there's 3 clear winners out of the NVIDIA news here today. I would say NVIDIA 1, I would say Microsoft 2, but ARM is now tying themselves to both Apple and NVIDIA. And if you're going to tie yourself to a couple companies in the market, Apple and NVIDIA, you could do far worse than Apple and NVIDIA.
Not a bad choice.
Yeah, it's a good choice out of ARM, but ARM's with some of the GPU development out of NVIDIA, and they also have that out of Apple as well. And so I'd say ARM there, number 3. So NVIDIA, Microsoft, ARM, but you also, I think you have some losers here as well. Qualcomm, I think, is a clear loser on this news. I think Intel is a slight loser on this news, and I would say AMD is kind of getting scattershot a little bit by this news. But AMD is also a big time AI chip name too, so they're a little bit covered there. But I do think Intel and Qualcomm have some concern on them right now.
Yeah, I definitely wasn't expecting that news, but I mean, NVIDIA doesn't surprise you anymore. I mean, they're just killing it.
No, well, and that's the reason we don't get pullbacks, guys, is because every other day we get some powerhouse news coming out on the AI trade, like either earnings or Computex or just Jensen coming out and saying everybody has software wrong. AI agents are going to actually ensure that we use more software. And so every software company is getting a major bid here today as well. So there's just always another news item that comes out in the NASDAQ to spur everybody's excitement.
Yep. Just keep it overextended. It's no pullbacks, right?
No pullbacks.
Yeah. Anything you guys else want to add happened last week before we get into this week? No? All right. Well, guys, let's move on to the next segment, Market Watch. Now, last week we mentioned there was pretty much nothing in the economic data sector. This week, we actually have a lot going on. So Becky, there's quite a few. I think I know what you're gonna look into, but what are you looking into?
Yeah, I mean, there's a couple of different PMIs, which we did see manufacturing PMI this morning, and which is good, important data for the economy. However, it does not generally move the market all that substantially, especially in the backdrop of the geopolitical situation this morning. So that was a pretty muted response. There is more PMI on Wednesday as well with the services this time, but the big one this week has to be Friday before market open when the employment news comes out: unemployment, non-farm changes, hourly earnings. So that, data about the unemployment and state of the country, it will be the biggest news impact this week. So leading up to that, there's going to be some pieces of that puzzle released, but then big guy would be pre-market on Friday. So, same thing with that. I don't tend to trade that anymore, but I absolutely will be a big part of like what I think Thursday might be setting up as ahead of that news. And then also Friday morning, I'm very cautious on making sure I see and digest what happened there. And if we can get a secondary setup off of that, that is my favorite. If we can get a really good setup coming off of a little bit of a pump like that pre-market.
I love me a secondary pattern after news like that. That's where the money's made. Absolutely. What about you, Matt? Anything on the economic data side you're looking at? I know there's probably a couple of earnings you're looking at, but anything on the economic data?
Oh, absolutely. The three reports I think are more important than others this week. Becky's absolutely right on all of them. Labor market data on Friday is obviously the big one. That's the one that the Fed pivots on every inflationary growth conversation. But there's some current recessionary chatter out there. And if there's going to be any early signs in recessionary chatter, it's not going to be on the labor side, that's lagging. It's not going to be on the inflationary side, that's lagging. It's going to be on the ISM PMI manufacturing side of the equation. We got that today. That was a pretty decent report coming out of 54. And then you got the ISM services on Wednesday, their PMI numbers on Wednesday. So the PMI numbers and then the labor market data are the three reports that I'm keenly focusing on this week.
Yeah, I mean, I've got to agree with you. You're not looking at Friday as the most important economic data day. You might need to reevaluate what you're doing.
It's an all eyes moment. Labor data is an all eyes moment.
Yeah, absolutely. Now, earnings wise, is there anything that's sticking out to you? Anything that might move the market, or is it kind of a slow week for you?
It's always a slower week when you're in the earnings off season. But the thing about earnings is it never ends. There's always an earnings conversation. And when you are looking at this week from an earnings perspective, it's got to be everything on Broadcom. Broadcom is a tier 2 AI name. It's probably the sixth most important company in the AI trade. And so AVGO is just going to be a little bit more important than the rest of the reports out there. But if you're in cybersecurity, Palo Alto, CrowdStrike also report this week. HPE reports this week. Internet of Things reports this week. On the retail side of the equation, you got companies like Ulta Beauty, Lulu. I think Lulu is going to be a very interesting name this week as well. But it's Broadcom by a country mile on the importance factor.
Mm-hmm. What are you looking for? Anything specific on it, or just watching?
Yeah, everything expansive of growth.
Okay.
In these AI names, it starts with the increase in guidance. Like that's what it's always about, the increase of guidance. And so on Broadcom, that's the first thing that you're going to be looking at is, do they increase guidance or do they not? Secondarily is going to be the percentage of the EPS beat.
Okay. Well, what is our EPS beat for the year now? What are we at?
For the quarter, it's an outlandishly amazing 10%. Like it's unreal. It's the best number we've had in, I don't even know. Like I really don't. Like usually it's around 7%. But the average EPS beat in the quarter is at 10% right now. Absolutely
crazy. No wonder we're just pumping to oblivion, right?
Honestly, it's not hard to understand why we're pumping. Every other day we get a ridiculous report coming out of the AI trade right now.
Mm-hmm. Becky, do you pay attention to individual companies' earnings rather than like the Mag 7, anything like that? I know you predominantly just trade the ES.
I do. I watch the big ones, honestly. Like I look at the earnings report ahead of the week, and then I'll watch the ones that have potential to impact my markets. And I used to do more options plays on the earnings with straddles or just being involved preemptively. But I have kind of locked into my futures lately, and so I watch less of the broad scope of them at this time in my trading. But I think that's kind of natural for a trader to kind of go through ebb and flow with what our predominant focus is. Because I spent some time where I was exclusively doing options, and then I pivoted back to more futures. So right now my stance is I watch the big companies, and then the ones that have less of an impact in the way my futures markets move, I tone them down a little bit right now, but they're definitely on my radar. I certainly look ahead of every week and ahead of each day. That way I know something is involved that might impact my trading.
Okay, yeah, great answer. Now that's what we're looking for this week, economic data wise, earnings wise, things like that you might need to know. Now we're going to get into our Coach's Corner segment where we pick a topic. We talk about it, we argue about it, we agree, we disagree. Something's going to happen, but we're going to talk about questions that real blue sky traders have asked and things that I know I personally have gone through. I know the other coaches have gone through. So it's a great thing to have. And this one is one of the biggest arguments, at least online and in Discords and on social media. People claim that win rate matters. Other people say it doesn't. So the question we're going to start with is, would you rather have a 90% win rate mindset or a 3-to-1 risk to reward mindset? And Becky, let's start with you.
Ooh, okay. So obviously I want to win all the time. But
yeah, of course, yeah.
if I had to pick, I just want to win. But I honestly think that aiming for and prioritizing a 90% win rate is not it. I think that is a risk for getting really disappointed all the time. And I don't think it's realistic to having a really
hold on real quick.
Pumping. Like some news just came out.
I don't mean to interrupt you, Becky, but the ES just jumped 20 points.
I didn't want to cut Becky off either, but I saw that pump come too. And I was like, send it.
Wow.
Sorry, Becky.
Okay.
Like,
if somebody knows the news in the chat, let us know while we just rant about this. But I'm sorry, I had to cut you off. That was intense.
Please. Yeah, now I gotta think about what the heck I'm saying.
Yeah, well, let's start over. Does the 90% win rate or the 3-to-1 mindset? Which do you think is better, or which do you have?
I got the news if you want.
What is it?
Take a guess.
Ceasefire's back on.
It is.
Oh my God, guys!
What we don't know yet. What we know is the president just posted that he had a good call, a very productive call with the Prime Minister of Israel, Netanyahu, and there will be no troops going to Beirut. And it looks like Hezbollah agreed that the shooting will stop. Okay, Hezbollah and Israel basically say we're going to stop shooting each other. I'll believe that when I see it.
I was gonna say
that's the news. That's the news.
Thank you for that.
Sorry, Becky. Sorry, that thing came out of nowhere.
This is our priority. We got to watch this market. I get it.
Yeah, right.
Now we see if there's follow through, because that is really a positive thing of like a comprehensive conversation that could be really changing the trajectory is a big deal on a day where there was like threatening negative and now there's constructive conversation. This could be a good turn here.
And this is why we do this live, guys. I saw Matt's face as soon as that candle hit. And I was like, okay, I saw it too. Let's talk about it.
Okay. Good job, guys. All right. So a beautiful win rate versus a higher R to R. So for me, I got to go with the higher R to R, but with caveats on both sides, because I think a 90% win rate is unrealistic, because I think that most successful traders are somewhere between 50 to 70% win rate. And that's a sweet spot of making substantial income from the market, because that means you're taking hits when they're small. Like you're trying to get into trades, you're putting risk on, you're entertaining trades, and you're not letting them go really far against you, because having a wide, gracious stop loss will give you a much more beautiful win rate. However, you're taking on a lot of risk for that. And there's a lot of risk involved in having that sort of approach generally. I mean, some people are just savants. I don't know. But I think that having a win rate of 90% is unrealistic. And if you're shooting for that all the time, there's a lot of letdown in that. And that's a little bit of emotional instability. However, if I have like a 60% win rate, right now mine's at 65, I think, when I looked this morning. It's basically like you're taking the best trades you can, best RR you can, but then every once in a while you get a home run, and that will propel your account balance higher. And so you can have like a really good win day where you get 3, 4, 5 R. And then you'll have a day where you're like 1 to 1, 1 to 2, and it will kind of level off, and then you can have another home run. And so for me, I want to shoot for good trades, and I want to take my hits. And so that speaks more to the 3 to 1 versus the 90% win rate.
I love that answer. Coach Matt, what about you? I know you might have a little bit different mentality because RR is different in swing trading. or is it not, in your opinion?
Well, it's similar. No swing trader will ever get 90%. If they do, they made 4 trades in a year's time frame. It's never going to happen. I don't even think you should target 90%. I don't even know why traders even pick that number and even think about that number, quite frankly, because I think if you're targeting 90%, well, let me put it like this. In all forms of trading, whether you're talking about cash flow systems, volatility systems, directional systems, you name it, there's a billion and different ways to trade in the marketplace. So whenever you're talking about the different styles of trading and you're determining, there's always going to be a 2-part categorization. You're always going to look at probability analysis, and you're always going to look at return to risk analysis. And any time, this is how the math works in the market. Anytime you're talking about 90% probability, you're going to have very, 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 very low return on that. It's the yin and the yang you have in the market. So if you're targeting 90% probability, you're going to have an extremely low cash flow rate, for example, if you're a cash flow trader. So if you're doing 10 delta contracts, you're going to get 3% ROI, for example. Whereas if you did a 30 delta contract, you're going to get 10% ROI, for example. So if you give up a little bit of probability, you get more return. And so there's this constant dance that traders make between the probability analysis versus the return to risk ratio. The only entities that actually trade that have 90% win-loss rate is, quite frankly, market makers and algorithms at Citadel and Virtue. And that's it. That's it. Like and they're literally just scalping the bid-ask spread between instruments. That's it. That's all they're doing. They're not even taking a cent. They're taking a fraction of 1 cent. It's like that. You remember that scene in Office Space where they had this amazing, plan to get, capture every penny off every transaction. Well, they just didn't understand how many transactions, and all of a sudden, a day later, it's like $300,000, and everybody knows they just stole money. That's kind of what Citadel and Virtue do to get that 90% probabilities. They just scalp literally fractions of pennies off every transaction out there. So if you want to create a system for you as an individual trader where you're going to be getting 90% probability, I just don't believe that exists on the day trading side or the swing trading side of the equation. And so I literally do not believe that exists. So I don't even know why people would even talk about it. Because if you're targeting even 70% or 80%, you're probably not letting your winners run enough. You're probably tightening up your stop loss too much, and you're not maximizing the return side of the equation. And so I would say no. If you're targeting 90%, you're probably doing it a little bit wrong. Because again, there's 2 parts of that equation. Probability 1, reward to risk ratio number 2. You get a higher probability, risk goes down. You get a lower probability, return goes up. And so there has to be that happy medium approach, I think, where you're trying to find what is that best zone for you. When you're determining probability versus return to risk. But I personally wouldn't even think about targeting 90% probability unless you're doing cash flow systems.
I have to agree with both of you. And I just want to let you guys know, if somebody's telling you they have a 90% win rate over more than a few day time period or a week time period, they're trying to sell you something. They're trying to sell you something. Nobody, unless like Matt said, the algorithms getting just the difference between the bid and the ask is doing 90%. And Becky and I were actually talking about this on the stream. First of all, I don't think targeting a certain win rate is just healthy at all. The chart's going to do what the chart's going to do. But I think it's going to make you think about every loss more, like, oh, now I'm at 88, now I'm at 87, now I'm at 85. Whereas the person that has the 3-to-1 mindset, they're okay with that 50% win rate. They know they're going to lose half their trades. It's just part of the game. And they may lose 5 trades in a row. It happens.
Listen, I was just the trader that wants the 3-to-1 reward to risk ratio, which is a beautiful return to risk ratio. It does not mathematically exist to have 90% probability.
No, it's not even on their mind. Yeah,
it doesn't. It doesn't
even on their mind.
No, it's not on the table. Doesn't exist.
Yeah, and the traders that do that, we can lose 4 or 5 trades in a row, and we know that next trade can bring us back to break even in one trade. So I think that's the kind of mindset. I don't even think targeting a 3-to-1 is healthy. I think targeting the chart and just being the trader you are. I was telling Becky a few weeks ago, I've had some of the best trading in my life, and my win rate was 60%. 60%. I lost 4 out of every 10 trades.
In Forex, I was targeting, guys, you'll think this is crazy, but in Forex trading, when I was doing it, I would target less than 50% win loss rate.
Yeah, and as long as your trading makes sense, that's all that matters. So I just think having a certain target and win rate is just not healthy.
You don't need to hit over 50% of your trades to be a profitable trader.
Yep.
Okay, but do you guys see what Omar's point is in the chat right now? I love this point. Targeting 100% is the key word, though. What you want and what you get is a difference, which is such a good delineation because
great point.
I want to win every trade I get in. I wouldn't get in it if I didn't think it had a good chance of winning. So I love what you said, Omar. But like, I guess the answer is like recognizing that you're not going to get 100% and managing your risk and knowing that 60 is solid for profitability. But again, every trade you enter, ideally we should be entering it because we think it will win. So that's a good point.
I agree with both of what you said. I don't necessarily go into a trade being like, ooh, you have to have this probability and you have to have this return to risk. I have to have minimum standards, 1-to-1 at T1, 2-to-1 at T2, whatever the top side is. That's a targeting mechanic in the market. But at the end of the day, you're going to make the trades based on your technical system. Let your trade journal tell you what your probability versus your return to risk ratio is. And once you go through your journal and you can start understanding, well, I got a really big win rate, but I don't have a really big return rate. Well, maybe I should learn how to offset some of that probability to maximize the return a little bit. But again, I would let the journal do the talking on that.
Yeah, absolutely. And I also want to add, I think for any newer trader, putting hard goals is going to be detrimental to your trading. Like 90% win rate, $500 a day, $1,000 a day, because when you don't hit those, it just makes you feel bad and it's going to hurt your trading. Whereas if you go into it with just the mindset of, I'm going to trade what's in front of me, I think it helps so much. But that was a great discussion, guys. I love that. You guys got time for one more?
Yeah.
Let's
do it. So this is a good one. Since we all kind of are in the coaching space, we all teach people, we stream. Now let's make this really broad, and this can be about you when you were learning to trade or somebody you know. But if you could only teach a new trader one thing for their first 6 months, what would it be? And Coach Matt, let's start with you because I don't know how many people you've taught.
A lot. I think the only continent I've not taught on is Antarctica, Justin. So, like, not a lot of demand.
Well, we gotta get some BluSky down there.
Well, they're opening it up. Like, there's no
the internet
there, so
let's
go, baby. But I have taught a lot of people. If I were to answer in general to like the general audience that I've taught to, I would say perfect covered calls, because if you have a foundation of cash flow, everything else in the market becomes really, really, really simple. But if I were to answer specifically to the day trading side of the equation, I would teach people how to use the 9 EMA as a stop loss gauge.
Why did I think you were going to say that?
It's too easy. It's my go-to. So I teach them how to use the 9 EMA for management decisions.
That's an easy answer, and it's a very simple concept to use. It's a line.
So I like it.
Yeah. What about you, Becky?
See, this is where we are a perfect balance around here, because Matt was strategy and technical, and I'm like, I would absolutely teach patience and like allowing your process to evolve as needed, and to not go full port in your first 6 months, to leverage down and to focus on the process and evolving your psychology with the trades. Because I think that there's such a natural inclination to start learning enough skills that are profitable and like go for it. But I would caution early traders that when you start getting a profitable system, it takes more time than we would like to really lock into executing it consistently, and then having enough data to really understand what situations it works in and what it's like more shaky in. And so I would encourage people to embrace the process and trade through that time, but to slow it down and expect it to take time, and allow yourself to ease into it with smaller position sizes and more focus on learning, such as being in your freshman year in college instead of trying to like create a master's program and expect those P&Ls. I think it's so much more protective of your psychology and your long game approach to trading to back it off a little bit in the beginning and know that that is a healthier approach, and you'll save your money while you're building up your skills.
Becky, I feel like you just reached into my brain and pulled that answer out because that was perfect. My answer was going to be trust the process. So you even said process. And the reason I say this is because everybody gets in here probably from social media, especially a lot of younger kids. They want to just rush in, make a ton of money, buy a Lambo, all this kind of stuff. I want people to treat this like college. You wouldn't just walk into a bank and say, hey, I want to work at a bank, give me $100,000. But everybody wants to make $100,000 when they start day trading. That's the number I hear the most. You got to treat it like college. It's not going to be quick. It's going to take a while. There's a process to it. You got to go through everything that everybody else goes through. You're not special. And if you are, good for you. But most of us aren't. So trust the process would be my answer. What about you on the psychological side, Matt? Do you have any advice?
I loved both your answers. I'm not surprised that the technical lab coach answered technically and the psychology lab coach answered from a mindset perspective. But I think it's extremely important to work on the proper mindset early, because if you create these bad habits as a trader, they are so difficult to overcome. And so I absolutely love Becky's answer. And the trust the process. It is a process in learning how to trade, learning how to ride a bike, learning how to drive a car, learning how to fly a plane, learning how to do anything in life. There's a process to it. It's amazing how much we, as human beings, that we value education, right? It's one of our number one values from the time we're 1 year old to the time we're 22 years old. We value education. But then you find so many people that find trading, whether it's through YouTube or social media, or they just find it through their friends, or they're like, oh, I'm going to go learn how to trade. But then they just go out, they go make their first trade, and they say, oh, it's like gambling. No, you didn't ever sit your butt in the seat and go through the process. There's a trading process, there's an educational process, and you have to embrace them both, in my opinion. But I loved your guys' answer. And so I just want to say 100% agree with that.
Awesome. I love when we all agree on things. I like when we argue, but I mean, most traders that have been around a while, they agree on the things that matter. And I'm glad we do that. And I'm glad that our people can see that we all kind of think the same thing. So that's great. That's all the time we have for today. If you guys haven't tried BluSky and you've been listening to us or on our live streams all day, what are you doing? Use that code BSKY50. Click the link in the description. Sign up. Get yourself an account for $30 and come trade with us. I don't want to toot our horns, guys, but we have been crushing the market as a team at BluSky. Every day, doesn't matter who's on. Winners, winners, winners. And we take our losers live, but our winners eclipse our losers. So as always, Coach Matt and Coach Becky, thanks for joining me. And traders, stay profitable.
TV. We are now starting one of my favorite hours of every single day. And usually it's because we get some decent price action, but most importantly, it's because the company we keep around Power Hour makes me happy. And we got a three-pack here today. Coach Matt, Coach Breezy, and Coach Becky with us here today to navigate Power Hour. Interesting technical setup coming into Power Hour as well. I want to go to Coach Becky first. Becky, how you doing? Had a wonderful podcast conversation. Thought you were a powerhouse in the podcast earlier today. How you doing for Power Hour? What you read on the market?
Thank you, sir. I have had a very interesting day on the charts, to be honest with you. I got in this a real long time ago, and I scaled out. I got in, I got back out, I got in 3 times, and so then I caught pieces of like half of the day's bullish move on ES, and so I'm got to be content with that because I locked out my last profit right before we podcast, which was super fun. But for me, like there was that early news catalyst which thrust us down pre-market into the demand of previous day, and so that was such an interesting setup for me of is demand going to hold or is the geopolitical tensions going to worsen? And for me, the demand held. And so it was longs for me all day. Now, as we're approaching Power Hour, it's kind of distended. We've had a strong push out of that support this morning. And so I'm a little bit more cautious on chasing more direction on the long. However, the state of the situation is we're pushing up and then we're settling out a little bit and then we're pushing up, flagging out. So I'm curious to see if we get a good pullback. There could be one more move up on this, or we could just kind of fade to close out Power Hour. So I'm very curious what energy we'll see as we progress here in the next little bit.
Yeah, I'm gonna get Breezy's take on that as well because I'm thinking about the pullback a little bit here on the ES. I'll get Breezy's take, but you did say something regarding the Iranian war headlines. We got one negative one earlier today when Iran said they were walking away from the negotiations, and then we had the president of the United States come out later on today and suggest that nope, everything's peaceful in Lebanon and everything's good and nothing to see here, folks. And it honestly reminds me of that old Karate Kid scene where Mr. Miyagi was doing the wipe on, wipe off. We're inter-day trading geopolitical war headlines here, team. Quite fascinating, no doubt about that. Breezy, welcome to Power Hour. Love having you here, my friend. What's your read on the market? Secondarily, first and foremost, how you doing, brother? Mhm. 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 That's where I get involved, is not on the double bottom, but on the neckline break. It's pretty standard for me as well, Breezy. Can you kind of just take a moment to kind of
Hold,
just teach what
hold
that
on,
neckline is?
hold on,
Yeah.
friends, boys. I don't think we can hear Breezy. Breezy, flip your mic so that you're on your camera share. Your mic is on, and your screen share. Your mic is off. Because I don't think our friends are hearing you.
We don't got Breezy in YouTube?
I can hear him, but it looks like Reno and Ace. We'll mess with it for a minute, and then we'll have Reno and Ace confirm, because they're the friends who are saying they can't hear you. On my end, I do hear you.
Yeah, Ace and Reno are both saying they can't hear you.
Yeah,
I can hear you perfectly fine. And team, you're missing some gems.
yeah. Hold on.
Breezy's bringing it. I was just taking a step back and letting Breezy kind of explain. And while Breezy's kind of checking his audio settings here, I'll just kind of recap what he was talking about. He was talking about the pullback on the NASDAQ to the breakout channel, and he was explaining a little bit of the old support, new resistance, and what we affectionately call the pop zone. Principle of polarities is basically old support acts as new resistance. And so the structure of that pullback on the NASDAQ came right into an old support, an old resistance level that was acting as a new support level. And then he was talking about the two ways you can trade that, i.e. the support bounce, aggressive, or waiting for ultimate confirmation above the neckline. And the last question on that was regarding the neckline. When Breezy comes back in, I'll have him. Breezy, do I got you now? I have you perfectly loud and clear.
Ace and
Let's
Reno,
check
you
with
check.
the team out there. Reno, Ace. Can you guys hear Breezy now? Just let no, still no Breezy here. It makes no sense to me, brother. Like,
I know, because yeah. Yeah, play with it for a minute.
yeah. Becky, while we figure out Breezy's audio issues here,
Nick's working on it, I promise you guys.
Nick, get on that. Ace said. Becky, what's your thoughts on the current pattern setup here? Because you kind of it kind of sounded a little bit like you were interested in fading the momentum pump earlier. I don't want to put words in your mouth.
I know.
But it did sound a little bit to me like the perma bear was coming out a little bit.
It's funny because I was actually perma bull this morning. If you guys were in the live stream this morning, I was like, that's a W in demand. Like, I held that long for so stinking long. It was ridiculous for me. So this morning I was all bulls, because for me, it was a hard fall pre-market into demand. And I saw the long that Breezy was going to talk about, and is going to talk about again here shortly. But I really like the longs all morning. Well, now I'm honestly 50-50, not going to lie, because right now we're in a pullback where we could hold here and there could be another bullish push, honestly. So I'm interested in potentially along here if this pullback right now to where this area is kind of in line with the most recent pullbacks. We've seen a little pullback and then another push up. So I'm 50-50, to be honest with you. And so I might not throw a trade on unless I really like it, but it could hold here. If it doesn't hold here and we can't take out the high and it starts to reject again, then I might fade and I might bullish this down, because there's an anomaly here, especially on ES. It's a little bit more pronounced. NQ is a little bit steadier on the climb, but on ES, if we fall back into that anomaly where it just kind of is a gap in there, essentially, I might be interested in fading into that.
Yeah. It's one of those things where the momentum came out of the headline regarding the Lebanon situation that the president just posted as we were doing the Skycast podcast.
Mm-hmm.
But we haven't seen, kind of fascinating though, kind of like we saw in the headline earlier today, there was very little follow through outside of the initial momentum. And then you flip the script and all of a sudden it was bull, 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 bull.
Mm-hmm.
Same type of situation here. We had that momentum pump from the headline, but there's been no follow through so far. And specifically when you're looking at the ES, I know we got the NQ on the chart there, Breezy, but specifically when you're looking at the ES is in a fascinating technical zone right now. Breezy was talking about old support, old resistance acting as new support. Well, the old breakout channel that we were dealing with here today is at the 21-22 level. You're currently on top of that by a couple points. That's that principal polarity, that old pop zone. You break that, you should see a little bit of move down to VWAP. Whereas if you break out at say 28 on the ES, you're going to look at a little bit of continuation flare. So it's truly astonishing that we have a 6-point range on a 15-minute consolidation pattern right now. And the market's just really kind of looking like it wants to make a move one way or the other here. I got this as a K trade setup. I'm willing to go long above 28. I'm willing to go short underneath 21.
Can anybody hear me?
I can hear you loud and clear.
Okay.
Team, test on Breezy.
I don't even see me on the stream. If you guys want to ignore me, Nick, are you able to hear me?
Reno says yes, by the way. I think we have your audio.
Got you. All right, Breezy, you're locked in. Your face apparently looks very matte-ish.
Okay, there we go. Yeah, I don't know.
Right, so Breezy,
we start over.
If you don't mind, I kind of did a rapid recap, but if you can just kind of just start over where you were talking about the W formation and the neckline break, and kind of then take us into kind of how you see the market right now.
Yeah, so I think it's super important. As I mentioned, you guys didn't hear me. I think it's super important to look left. That's kind of where I want to start with. And I'm kind of going to go into some redundancy that I mentioned earlier. It's super important to notice what type of trend we've been in the market, right? Like you have structural bases that have showed resistance, right? You've had downside distribution. Every single time that a zone has been formed, what was resistance has turned into really good support. This is a 30-minute chart, for example. You can see, hey, like what was resistance turned into double solidified support, right? When you identify these variables in the market, you know that the bears, sadly are not winning. I thought 30K would be a good testament, kind of an exhaustive phase of the market. It was not, right? We had a test. We came back to the 29.8s and we showed a W pattern, right? It's important to kind of identify that because when you think about intraday structure, like where do you find a variable or probability or an edge to get into the market? Well, it doesn't take much to identify what has consistently been happening and how do I take advantage of that. Friday, we had inconsistent price is what I'll say. We had a crazy parabolic rally early on, very healthy pullback, and price halted. This is Friday up here, excuse me. Price halted exactly where it should have. It halted within all of this accumulation and congestion. So you come into the day. What did price do? Well, from a 15-minute perspective, and I'll just put a line kind of right at these areas down here at this low, for example. Price decided to use that prior accumulation as support, right? So what could have been resistance had a really good break, a really good snapback, and solidified support. 15-minute does a really good job of painting structure. You come down to the granular time frame, say the 3-minute structure, you see a very identifiable, clean W pattern, double bottom, right? I know Becky and Justin were live during this. I took this long 7 days of the week. Like when I think about a risk perspective and I look left, well, what is my downside risk? Well, it's going to be some form of accumulation to the left. It's not a crazy candle, not a crazy range. Like I have known accumulation there, and that makes me comfortable taking an equal low opportunity. The equal low opportunity is not the best entry model, right? This is an aggressive entry model. The confirmed entry model is going to be a break of the neckline. You could say it's like 34.50 within this range. If you missed the breakout, what I was mentioning early on and how clean today is, I personally think it's the cleanest technical day that we've seen in so long. If you missed the W pattern at the low, you missed secondary neckline breakout. Price gave you an entry. It came right back down to VWAP. Even if you don't have VWAP there, look at the candle structure. Look where price halted. What was resistance to the left, as I mentioned, kind of in that concept of bullish continuation. What was resistance has shown support numerous times, and it did it again. And then lastly, I know this is kind of like a broken record. Even if you missed this retest to this resistance support flip, it produced a clean flag. So as a perma bull, like this setup, this structure, so good, like so beautiful. And then you come into current state of price. I am looking for and broken record. When you think about what was resistance over here in the 590s, you could say may have an opportunity to produce support. So if we can get a 590 retest into this power hour, I'm going to be looking for longs in that area. Clean structure, clean two-legged move to the upside. Probably third flag break of the day as well within that variable. So really beautiful day. That's the technical read on it. And I hope everybody took some plays within the bullish side today.
Well, that was my long that actually produced my best points today was that retracement that you just pointed out. When we broke out of the morning range, for me, I set alerts when we have an initial balance, when we break it, that was a clean print above it. And there was a news catalyst with that pump. However, the technicals behind it held. And so it was a pump and it closed outside of the initial balance in the morning range. And then it did a retest, both a VWAP and the initial balance pump, as well as my value area low from Friday. So I'm like, okay, that's like a trifecta of a hold position for me too. So that's when I built my long position that I held to higher targets there too. And so I love that whole perspective of when it was resistance and we can break it cleanly, strongly with some force, and then we retest. Like watch that. Like when you see that clean break, you guys, even if you're done trading, but you have some potential eyes on it, I love setting alerts and then watching what happens when we get back to that, because it doesn't necessarily mean an alert hits and you just buy, but more so it means an alert hits, you're at a key area, like what's it going to do there? Because it did give some nice signals there.
Yeah.
Beautiful rundown.
How do you guys see it currently? Like as we got 45 minutes left in the trading session, Nasdaq's pulling back, ES consolidating. How do you see the structure here?
I mean, I can lead with that because I know I kind of just touched it. I think structure right now is in a no trade zone. We need two things to happen with this type of extension. We need support to show, like where is support going to be? For me, it's going to be in that 590 range for like solidified price structure support. You have a base for me now. You could say 610 to 620. Like that's a base, but this isn't enough data to really solidify much. Mm-hmm. So what I would expect is going to be a lower retest to the 590s, or you're going to essentially see another flag break. That flag break on the Qs, like the first conversation, has to be above, say, 630. Like if I'm looking at a 5-minute chart, we get a curl, I need a candle close above the 635 area to solidify a flag. I think that's really good risk. Me jumping in front of a long at like 612 that's got a couple wicks, this couple base, I think you're begging for some drawdown in that trade. Drawdown isn't too severe. Like we're talking 20, 30 points of drawdown to maybe size into a trade. But for now, I feel like we're just kind of sitting on hands, either waiting for a flag to produce, or secondly, more confidently, is waiting for what was resistance to turn support for some continuation to the upside.
Well, and that's kind of where my head's at there, Breezy, because I kind of feel like the NASDAQ wants to come down and test that 600 level. The ES is now basically in a 6-point range right now of no volatility and if you break support with the 15-minute 9 EMA that is now converging against pattern, you can see about a 15-point pullback in the ES as well. So I am considering taking a trade underneath that 15-minute 9 EMA on the ES while the NASDAQ continues its pullback.
Yeah, I feel similarly of like, I feel it's been hesitating now for the last considerable amount of time here, almost an hour, hour and a half.
Mhm.
Honestly, it's been kind of sideways. And so that shows me that it hasn't pulled back yet. And so it could just flag out for the rest of the day. We've seen that
Yeah, the ES hasn't pulled back at all against
Yeah.
what the Nasdaq's pullback has done.
sideways. Yeah. Yeah. I'd be on edge for both plays, honestly. Like if we could break this cleanly, I think we could get a push. I think VWAP below is a good target, as well as like the breakout on ES is closer to like 7610. And NQ is a little bit closer because they have had a stronger pullback. And so kind of different opportunities on the different instruments a little bit, which is this morning too. They played a little bit differently. And I think maybe that's the power that's going on with the AI, like the days like this point out the fact that they're not made up the exact same components, so they do move slightly differently.
Yeah, I think today, so NVIDIA, and I know you guys talked about it, Matt. I know you were so excited about today's release on
It's not
NVIDIA.
excited about NVIDIA getting into the personal computer business.
When you think about, so one, I'll take a minor step back. When you think about exhaustion in a rally, I feel like from a price perspective, we've reached that extension numerous times, right? Like we were talking 30K.
Are we talking like on the daily chart in the NQ?
Yes, I mean now
we've been deep
approaching
overextended for a
31K.
month. Yeah.
And every time I think that price has reached a logical extension, we are getting partnerships with the major companies that matters. And I mentioned this with MU last week.
You don't get pullbacks in the NASDAQ, too many headlines. And like every other day, we get a major headline out of the AI trade.
Yeah. And I thought MU was, that news for MU was a major catalyst that I think most people kind of overlooked quickly. We saw the pump, but like the fundamentals of what it did to the market was super important considering the geopolitical macro-driven environment that we've been in. We know earnings are going to move the market. For me, it's the only thing I can think of is like, hey, MU had such an isolated catalyst that pulled the market upwards, right? Which is market dynamics 101, but that's kind of been secondary for so long. Well, you look at the NVIDIA drop today. What I thought it would do was like crush the secondary AI model. It did not. There was some pullbacks.
In fact, IPP went up higher than NVIDIA did.
Yep. Like there was some pullbacks, but it did not give the reaction that I'm assuming, right?
I know exactly what you're talking about, but think about it from this angle. So you got two major components of the NASDAQ. You got software and you have semiconductors. Semiconductors have been the heart of the AI trade for a while now. Software's been a positive theme, been a negative theme, back to a positive theme. But with software specifically, there was that one trend to the downside where Anthropic was coming out every other day with a negative warning sign towards software companies, and they were just pricing in Armageddon in software. Well, Jensen, over the last 3-4 weeks, NVIDIA head and the king, queen, and country of all things AI these days, he came out and he basically stated people have the software trade wrong. And this isn't the first time he has said that, by the way, but he did reiterate it this weekend and earlier today. His argument is in the age of AI, specifically with AI agents, you're going to see an increase in software spend. You're going to see an increase in overall revenue, not a decrease. And over the last 3 trading sessions, software is going ham. Microsoft's finally joining the party a little bit, but Adobe coming from the lows, ServiceNow coming from the lows. You have all these other companies, CRMs breaking out of a reversal today, for example. And so you got a lot of movement coming into software. And on a day where NVIDIA is a catalyst, I wouldn't have suggested that secondary components in the AI trade were going to be priced better, but yet here we are. That's exactly what we're seeing. We're seeing the continuation of what we saw early last week and a little bit over the last kind of couple weeks, quite frankly. But I thought for certain we were going to see a little bit of outperformance on semiconductors versus software today, and that's just not what we saw. Software's going ham.
Yeah, I mean, you've even seen. So I have Team up on the chart now. Like you've had Team.
That's a
You've
secondary
had
AI name.
you've had Okta.
Okta had a great Okta had earnings last week, Breezy.
Yeah.
Beat on EPS, beat on revenue, decent guidance report, but it's like even lukewarm guidance updates like Okta, which I wouldn't describe as amazing, are just getting outlandish love by the market right now.
Yeah, you have SAP, like you have all of these tangible aspects that are like secondary, that are now getting the reward. And again, like I mentioned, my initial thought was like when I seen this news from NVIDIA, I'm thinking, okay, this thing is now going to be the leading proponent again, as it is, right? Not from a range perspective, but it is
From a theme, it is.
perspective.
You know, if NVIDIA cracks, every conversation we just had cracks.
Yep.
I can't say that about other companies in the market. But from a momentum perspective, I don't know if NVIDIA is going to lead the charge here. I don't really care. I love NVIDIA, and I do think we go up from here. I have us in wave 5 on the daily chart on NVIDIA, but like it's very interesting to see what's happening in the backdrop of a lot of those reversals in software right now.
Yeah.
And I don't blame Yates for pulling a little bit off of service now. That thing drove into the 200-day moving average, and I think that's a logical area to start taking some off on any position type analysis. Swing traders would just take the gift of the trading gods and lock it in at that point. Position traders scale out, just stop loss.
I was kind of saying all that to say this market is not done. Like when you think about the news and the partnerships, like you look at ARM and their partnership, like ARM for me has never been like, I do not like trading ARM. It's
not consistent technically.
It's them options and even the stock itself is super inconsistent. I looked at it today.
ADR can be consistent a little bit in general, but yeah, I'm
like when you have ARM back to, I'm not going to say an extended evaluation, but like this partnership, and I mentioned this maybe a month ago, the market is rallying on good companies building partnerships. I can't remember who it was that I initially talked about.
ARM was with Apple. And then ARM is also part of the NVIDIA news because ARM powers some of the NVIDIA GPUs that it's going to be with the PCs.
I'm trying to remember who partnered with Meta. I think it was AMD.
Meta has partnered with Google, OpenAI, AMD, and
I think it was
everybody partners with NVIDIA, like legitimately everybody. And then they have secondary offerings to cheapen the edge a little bit because NVIDIA is a premium product. But per gigawatt, NVIDIA pumps out more than anybody else. So
this market is not done, and it's kind of crazy to think after a 23K tap and all of this extension we've seen, daily chart really paints the picture. And if partnerships and data like that keeps coming out, and then you have to factor in, like, we've yet to see true resolution with Iran. So, like, this market is impressive, is what I'll say.
Wait till we get the inflationary gone bid.
Yeah.
But I'm glad you brought up the long term because we fixate so much on the short term sometimes intraday that we lose a little bit of the forest through the trees on the long term. The weekly chart is in wave 1 of the new trend, and the daily chart is in wave 3 on the ES and still in wave 1 on the NQ. I have us in extension territory, but I have us just beginning the trend. Like I don't have us coming to the top end of these trends. I just think we're a little bit overextended here, and secondary patterns obviously play, but I'm not concerned about the health of the market in general.
I love this conversation because I need to hear it, because I'm like, when I get a mean reversion opportunity, I'm all about it. I'm not even going to lie. And this situation is so extended that it like gives me pause, because I am like, I have to fight the urge all the time of like hunting for the bears to throw down. And I think that there could be a situation where we do get a meaningful retracement on this larger time frame pattern. But everything that you guys just reviewed is like, there is so much positive things that are driving the corporations that make up this futures instrument. And so that can't be denied. And then we come out that this Iranian situation finally does get real resolution. Like, how positive is that going to be for the world? So I have got to like keep my bull glasses on purpose with intention, like reminding myself daily. Because I mean, thank goodness I was bullish this morning after that fall, but it's hard when we are extended like this. I got
a hot take on real time alleviation. Like that deal gets signed, market sells off.
It makes sense too.
What? I mean, what signs?
Yeah,
the market has priced in fake news headlines far more aggressively than it should. And there's an old general rule in the market: buy the rumor, sell the news. Yeah. And so that's the only reason I say that. And when I say sell off, I don't mean anything aggressively. Because one last point on the longer term fundamental side of it, I know we're geeking out about price in the NASDAQ and the AI theme. The craziest part about the entire conversation is PE ratios are lower today than they were a month ago.
Yeah. You know, Becky, one thing I do want to mention real quick is, although we've been so bullish, the bears have been very opportunistic with where they're selling at. Yeah. The bears have impressed me. You have to remember Friday. Friday had such a crazy upside extension, and bears completely flipped price. That wasn't necessarily the impressive part from bears. Like, bears produce secondary sets with continuation back to known support. So there are bears out there. There are people taking to drive price down right where it should be.
Yeah.
Yep.
I was ready for
I think anything after that initial rally, this is pure profit taking. The secondary sell that happened on Friday, that's strategic selling from bears. Like, it was beautiful.
It was. Yeah. It started pushing so hard on Friday, and I was like, I'm not doing it. I can't do it. I can't chase this thing. So I just waited for a strong sign of the bears, and I just got in and held on, and it was like nice. But I mean, they are taking good bites. There has been bearish trades throughout this period, especially in the last week. We've seen some decent bearish trades. But what have the candles closed as? Which is like, they just keep closing green. So, you know, here we go.
It's going to take something major to its trend. And I do agree with Matt to where you have, you know, sell the rumor, buy the news. Variables involved to where that may be it. Like, until then, we're kind of in that phase to where any news, it doesn't even matter what the news is anymore. It's been a structural support test every single time, and the bulls have met that news or whatever the variable may be with intentful buys. So we'll see. You know, that's why it's best to trade the chart and not your heart.
What ends the current trend in the market? It's either black swan or earnings, and since you can't predict black swan, I'm going to say earnings.
Yeah,
that's it. That's the two. Like, usually you get a positive catalyst in earnings season like we just had, we're going to be trending through the quarter.
So that's the question then, because the actual earnings reports are about wrapping up. And so the momentum from those could continue into the next earnings season is what you're saying, because all of the companies, as they round out this earnings seasons for the spring, are saying, we're good, we're strong, we're going the right direction, and we have a strong plan for our company. And so then that is, you know, we always talk about the earnings day and the pump we get in the secondary pattern there. But what about, let's talk secondary patterns of like the next 3 months, because it can hold just as strong. Is that kind of what I'm hearing?
Earnings catalysts have a tendency to carry to the next earnings season unless there's something that changes the overall dynamic on the fundamental picture. And so we just came through the best earnings season that we've had in what I would describe as a decade. And I'm just pulling that off the top of my head. It could be the last 20 years, quite frankly. There were too many catalysts, too many good news, too much this, too much increasing in guidance. And it's not surprising to me that we're seeing follow through on that type of number. A lot of people describe the market at the all-time highs through alleviation of the Iranian war. I think that discounts what's really happened, and that's from an earnings perspective. And that does have a tendency to carry over to the next earnings season.
Yeah, makes sense.
Yeah, Ace is such a good comment. We talk about, Becky's right. We talk about it in terms of secondary patterns following the specific earnings reports, understanding gaps. But one of the number one things that I look at in earnings season is the themes that get started early on in earnings season, because there's carryover. There is this follow through situation that happens from an earnings backdrop. And a lot of times once we get that, it's amazing. The NASDAQ is already breaking that support level and the ES is not yet. That is truly amazing to me.
I like pain.
But there's absolutely carryover. And again, it works the same way long term as it works short term. Let's say you have two economic data points in the same trading session and they're split 2 hours apart, right? So let's say we have economic data point 1, catalyst occurs, market starts pumping in. It's going to trend that way typically until the second data point. Same thing with earnings. It just happens on a bigger scale, a longer term scale. But you got to remember something, guys. What happens more? Investors making decisions or day traders making decisions? Because it's the investor class by a billion times. Like it by not even close. Not even close. Investors don't care about these intraday conversations in any capacity. You think an investor cares about a 15-minute pullback against price action? They don't care about that. They care about what they said in earnings, and then they're going to check back in next earnings season. So there's themes that create and that carry us. That's right. Mm-hmm. Oh, don't get me started on BlackRock, Ace. I won't stop.
Oh my God. Same. Not
a fan. Not a fan. By the way, I am in my short on the ES. We'll see if that it's more of a scalp, but we'll see. We'll see what happens there.
So I am the opposite, which is super aggressive because it's yet to confirm it, but I'm trying to take along on the Qs. It's a wide zone. It's a risky set. It must hold. It must show support right now.
20 minutes left.
Yeah.
Because I do really like, that's one of the reasons I don't love my short on the ES, because the NASDAQ's at that support level.
Yeah.
I thought we were going to get a little bit of NASDAQ break, ES break, but ES held firm on that NASDAQ when the NASDAQ pulled back last 5 minutes.
I think ES could pull back to 7610.
That's kind of where I'm going to get out. Like I'm not going to.
There's got the momentum right now is what I'll say. If the NASDAQ can hold price and produce a green candle back above, it's a little baby wick right there, back above, say, 595, then I think the vision I'm looking for plays out. But if not, Bears got the momentum right now. And from like a target to target perspective, you had a minor break of structure here at 612s on the Qs. Like if this is a bear target and they were to flip, it would make sense because we're in that same variable of like what was resistance could be support. And you know, I'm aggressive. I'm willing to front load it and see.
I think it's a very, very important support zone here on the NASDAQ.
Yeah.
Yeah. Yep. Agreed. You're gonna get smoked.
Like I said, I was trying to get the ES to break that 15-minute 9 EMA while the NASDAQ continued to pull back. ES broke the 15-minute 9 EMA literally when the NASDAQ hit support.
Yeah, it's tricky that they're bouncing today.
Oh, I'm giving little. I'm not even playing the pattern on the ES. I'm playing the candle. Like I'm very aggressive on the stop loss right now.
Yeah, it's key. We'll see.
My man Ace has turned into a dang perma bull.
Ace is been more on perma bull team, Breezy. Ace is more on the perma bull team. Yes. He's with us. Becky's joining us very soon. I can tell. I
am adjusting. I'm trying to just be super flexible with this market.
Hang out with me and Breezy on our macro conversations more, and it'll get you there.
It's helping. I think it's solidly helping.
We need such a deep pullback though. Like I can't even, when we went above 30K, like my interest in the market started to decrease a little bit. We're here to make money. It's our business. It's what we do. But I just mentally, I'm thinking, even from a perma bull, I'm thinking, man, is this not extended? Where is going to be the true structural retest from what was 30K on the NASDAQ? Well, you had a retest back to 30K. Now we're already up 600 points. Before you know it, we're going to be at 31K, which is just anybody who's been trading as long as me and Matt. That number for me is like, my mind is hard for me to compute 31K NASDAQ.
Harder than even the 50K Dow, I would say.
Yeah. So here we are. So we're gonna make money and do our best one way or the other.
But just think about this. At some point in your guys' lives, I'm a little older than you, so I can't say mine, but I'm going to say yours. Dow's going to be at 100,000.
Yeah.
Just is. I know it's mind-boggling. I know it is. But it just
will get on board. Oh, God.
I remember when I first started trading, there was a book that was written, said like Dow 30K or something like that.
Yeah.
And every one of us traders like, oh, that's outlandish. That's ridiculous. How you doing that? How you talking about that? It's ridiculous. Compound 12% gains over the next 30 years, and you tell me where the Dow's going to go.
Yeah, but give Pant Bondi the credit.
Pant Bondi 50K? Yeah.
You know, and like I look at the true ETFs, and I remember thinking, man, SPY 500 seemed years, and I mean years ahead whenever COVID hit. Yeah, we had the crazy rally, but I never envisioned it would, rally the way it's had. And here we are today. And it's like, that was just a structural retest for continuation. And you look at like the weekly charts, say on the NASDAQ, like we're going to see a retest at some point to say 26,500. That area turns support and we get a secondary leg up, which, I don't ever want to put anything past this market, but I see that happening through years. Hopefully not that long, but through time for sure. So yeah, like we get a secondary support hold of structure before this crazy rally. Yeah, the market's not stopping. Not even close.
Yeah, the only thing I'd say to the Goldman Sachs exec right before the 2008 crash is there's fundamental differences between right now and 08. Vastly fundamental differences between right now and 08. The number one is what the market decided to embrace after that crash was quantitative easing and monetary policy that is far more dovish than anything in human history. And the markets are very, very aggressive to adjust on the interest rate side of the equation. But I also think 08 comparisons against today is it's apples and oranges, in my opinion. The Fed was raising interest rates in 07. The Fed had topped interest rates in 07. The Fed had already been cutting interest rates for 10 months to offset negative economic data before that ever even occurred, which means the market had already been going down for 6 consecutive months before that even occurred. And so just again, I love the conversation on it, and I love doing cross comparisons against, old market data versus today. I just feel 08 is not a good comparison. I think the .com comparison is a little bit of a better comparison.
I would agree.
Great points.
Man, everything's a structure right now. Even looking at MES or ES, it's right at this base. Like, who's going to win this battle at this area with 15 minutes to go? Anybody is
all
the
I
good
want
question.
is my 10 handles, Becky. That's it. Just give me that 10 handle and I'm out.
Come on, keep it. I see which team do I cheer for now? Because I'm flat on the day. I feel like this morning was a real long hold, and
I'm Team Bear for a scalp, and then I'm switching back to Team Bull.
Yeah, honestly, I think it's sliding down today. If I was in a trade, it would be probably this short with you.
And I think we're talking the same language here on the 99 versus the 2008 one. I think we're all talking the same thing there. Because I think we all see the comparisons. Like, I wouldn't say we're in 2000. I would say more 98, 99, but.
What did we talk? Who said it this morning in the stream with Justin? Somebody said something about the 90s. I was like, it feels like the bull is partying like it's 1999.
Little
Partying
Prince?
like the 90s.
The bulls are always partying.
Yeah.
Hey, listen, I'm down for a Prince drop any day of the week.
Whew.
Man, oil. Haven't looked at oil in a while. Still up
I got
there.
tempted last night to go above 90. Like really close. Like really
crazy.
close. I didn't pull the trigger. No, I did do the ES. So I watched the ES scalp like 10 points last night over like a 2-hour time period. It was the snooze fest. Crude oil caught a bit above 90 and smacked all the way into like 95.
Can we talk about gold really quick while we have you?
Oh, if we have to.
Yeah.
What is she doing? She's just
if we have to, right?
I know.
I think so for me, and I'll lead so Matt can kind of go.
Yeah.
I'm going to remove everything just so we can see organic price on. I got a lot of day trading.
Oh, you don't have to change your charts if you don't want.
No worries. I think gold has kind of. It's a pure. I don't want to say pure risk asset, right? But like when the market's going as parabolic as it has been, gold is now secondary. And 3 months ago when we were talking
on everything,
like it was shadowing every index out there, right? Like it was mirroring price of the NASDAQ every single day. That was an interesting place for gold to be in. It's not where it belongs. That's kind of the first and foremost for me. Like when I think about gold price and I think about how I want to be a gold trader, I want to be a different trader in gold than I want to be in the equity market. That's why I prefer commodity trading. That's just kind of my first initial thought on gold is it had too much polarity and similarities to the equity market. That's not what it belongs into from a fundamental perspective and a technical perspective. So gold through time finally broke out of that model. That isn't aggressively selling off. Like we've yet to produce other secondary tests lower. But this is where I want to see gold, because when the equity market cools off, which it will, what do you think my first eye is going to be on? That's going to be on a gold rebound. So I'm personally glad to see small pullbacks in gold. I'm glad to see gold be stagnant and get some minor downside continuation, because I know what it means long term when the equity market finally cools off.
That's very good. The only thing I'll add to that is if I didn't have a position already well established in gold, I would start building a position right now and I would start the accumulation phase.
See, that's what I'm thinking, is because on the bigger time frames, it was a beautiful run up the end of last year, start of this year, and then it's just
do it again.
Yeah, well,
it will.
It feels like it's drifting down, which means it could be a large time frame period of accumulation at this level on a, you back away out from the 15-minute chart, and it looks like the momentum down is slowed and we're dinking around, which feels like accumulation.
It has, because there's something that Breezy doesn't have on his chart that is very important to gold right now, and that's the 200 SMA. The 200 simple moving average is an investor battle zone. Kind of like all these intraday levels we talk about are day trading battle zones, right? Well, the 200-day moving average is a big time battle zone. And gold is in a pinch right now between the 200 on the bottom side and the 50-period moving average on the top side. And so you got this kind of a rare situation in gold, quite frankly, where the 50's pressing down and the 200's pressing up, and it's creating a pinch. And you could see some explosive volatility coming out of it. But again, if I didn't already have a position, I would start accumulating here because of the 200-day moving average. We've had multiple different tests against the 200-day moving average. One extremely clean, two very choppy over the last couple of years, but ultimately both of them proved to be pretty decent buying opportunities on the longer term side of the equation. So like, to me, it's like, do you like gold or do you like GDX? Because both of them are kind of doing the same thing right now. To me, I think it's a fascinating backdrop in gold. And I think if gold, you see that top blue line there, Breezy, if gold wants to close above that line, we're going to get some move here. So I do think accumulation has began. But at the end of the day, this is more of a slowing momentum drift at this point to a very important 200-day moving average. Let's see how that behaves over the next week or so. But
Okay,
I personally would start accumulating if I didn't have a position already.
Yeah, that was kind of like, that's my stance too. And I'm marking it, and the levels are starting to get gummed up on top of each other. So I'm deleting and adding and trying to keep it clean, but it's just messy, which means like we're really consolidating, and it does feel like accumulation to me as well. So.
And when I say accumulation, I mean like accumulation where you don't look at the P&L column for the next 10 years.
Yeah, I mean, it would be.
That's what I'm talking about. I'm not talking about a trade here.
There's some technical space to go lower, and I would love it. I would love to drop 100 points on the GLD and really get a great
big
buy
pivot
on
to the
gold.
left is down there.
That team looks like
honestly,
Bears.
if that happens, you could get a break, pop back up, and do the fake out breakout trade. I don't mind that technically, but I think we're early in the conversation on gold. It's kind of a slowing momentum. Everything else has more interest in it right now. But that's kind of where I'm like, okay, now let's see what happens here. By the way, we're 2 ticks away from that. Are we going to get it? We're going to get it?
You got it. Bears took that structure.
They took it. Yeah, I think 11 to 10 would be my exit on this short.
And the driver surprisingly of that structure break was the ES.
Yeah, she was there was a gap. It wasn't as clean of like a steady march. NQ was a cleaner march, like overplaying, but there was a value gap there on ES that was low volume that we're filling out right now that we sunk back into. That was a good play.
So should I let my target just work at the 10 level, or should I adjust here?
Yeah, but I think 10 is very reasonable because that's the breakout location. 9.5 was the high before.
Definitely scaling out like pretty aggressively at the 10 level. I'm not. This is honestly just a scalp for me. It's not.
Yeah, like I wouldn't hold all the way to view up with my full position. I would scale out at 10 because it's right above the 9.5 where it broke, and then you could hold a tiny bit of a runner for the VWAP.
Well, VWAP is. You think it's far away? It would take some momentum with 7 minutes to go to get there. I think.
Yeah,
there's a crazy sell candle in that range, though.
Oh my gosh, how is there only 7 minutes till market close? I can hang out.
I was going to say, how are we only saying? I thought we had 30 minutes left. Guys, I have truly enjoyed this conversation. It went fast. Yeah. But now with that said, I'm going to pull most off at 10.
Yeah.
Maybe keep a little partial going into the close. See if we can get that down to that VWAP at 76. But
yeah.
Ace, that is a great question because I am all about I think it was you, Ace, who asked me months ago when Matt was there. It's like, hey, how do you be a good oil trader? And I was saying, hey, trade gold instead.
Trade gold.
I still stand behind that, but one thing I do on oil is I short it. I short oil with a big smile on my face when it comes. That time is not here yet, which is still mind-blowing to me. The biggest trigger to – I don't want to say easy because no trade is easy. But when the trade is officially open, resolution is ended, you're going to see $40 to $50 decrease, about 30, probably $30 decrease.
Minimum 20.
Yeah, I mean, and that trade is going to be a smooth one because we're still so elevated from an oil perspective.
But on the flip side, can I just play devil's advocate a little bit? Iran literally just shut down the strait today, like completely locked down, closed. This was after the last couple of days where 26 ships went through. Literally today, they just shut it down and said, we're not going to be talking. If they shut it down prolonged, we're not going to be talking double digits on oil. We're going to be talking 120, 130, 145 on oil. Like like on the flip side of everything you just said is oil has been shockingly held back from what is really happening in the world. You go out in terms of real spot price, what you can actually get oil delivered for, go to Oman and see if you can actually get oil delivered at $93 a barrel. Not going to happen. It's more likely $140, $150 dollars a barrel. And so there is a difference between what people are paying for spot price and what we deal with on the futures price, quite frankly. That's number one. True escalation, it's not shocking to see oil at 145 on true escalation. And for true escalation, we would have to escalate above what we were doing, right? And so true escalation would not just be us dropping a couple bombs like happens every other day right now. True escalation would be troops on the ground in Karg Island, for example. That would be true escalation. So I think it's a very, very difficult assessment outside. I think crude oil is difficult to project 5 minutes from now, let alone 5 months.
Yeah. And then the pain of all of that we'll be living with for quite a while.
Yeah. The aftermath and what happens to the real human involved.
Yeah, I hear that too, that we have enough oil. We have enough oil. We're the number one producer of oil. Yeah, that's a political message that gets caught up in America. The oil market is a global market that everybody participates in. What happens in the Straits of Hormuz has a direct impact on the price of the pump in the United States, regardless of us being the number one producer, the number one exporter, and our oil domination against the rest of the world. I closed all of it, by the way. I didn't scale out.
Yeah.
You almost got it. I mean, you were there. I saw the 10 flash on my screen, I think.
10 clean points.
10.5.
Hit a standard. Or 10 minutes.
That was stick short.
Apparently these days that is true. The first rule of Hormuz is we do not talk about what is actually transpiring in Hormuz. This is real. This is true. This is true. Well, the problem with Venezuela is they don't run in our cars. The issue with Venezuela oil is that the refinery process is not cheap. But we will just take it from them. Yes.
All right, team. Any final thoughts going around the horn?
No. I waited for that consolidation break for literally an hour, and I was in the trade for about 15 minutes. So, yeah.
Nice.
Well done.
I mean, I think today I'm still going to close bullish because we got the push down pre-market, and then the bulls kind of owned the day despite having this pullback to close out the session. So again, we're starting off a new month today, a new week today. Did we put a wick on the weekly candle, on a monthly candle? I don't know. We'll see how this next couple of days plays out. But I always like to think about that at the beginning or the end of months. So I don't know, but last month closed strong again. And now we are opening up with still the bulls trying to be the bosses. So, watch your supply and demand. That's what saved me this morning of seeing that negative news and that negative push and not chasing the bears. So definitely a market, in my opinion, to stay super flexible with and just lean into your technicals and don't chase momentum on the news because it can not continue at any point, which is what we've seen way more often than news continuations.
Well said. There's really nothing more to say than that. I think I'll leave it here for me. I'm looking at MES right now. This sell-off, this candle really tested prior day high, didn't close below. So really, when I think about tomorrow's trade plan is pretty smooth, in my opinion. You now have a structural retest on ES, which happens to be Matt's PT. That happens to be Friday's wick high. Hey, that's a breakout trade. If it continues, now you have today's high as a target. So those are the things I look at all-time high trading. Do we have variables of known support, known profit targets to have proper R to R? So I like today's candle. It looks good.
Beautiful. Well, we'll see what the rest of the week has to offer, but it's always a pleasure streaming with you guys at BluSky. It was a great session today, morning and afternoon, and really good conversations that are making me a better trader. And I'm just so grateful to be a part of and happy to be here with the team. So there's a sale here at the bottom. If you're new to BluSky, I don't know why you're this late to the party, but get a 50% off launch plan.
Yeah.
Tim, thank you so much for navigating Power Hour with us. We got Coach Becky tomorrow for her psychology lab. That is a must-see event every week. Got to work on the mindset the same way we work on our eyesight from a technical perspective. Got to have this locked down as well. That's what Becky does every single Tuesday right before Power Hour. Full slate tomorrow from Justin in the morning through Becky with the Psych Lab into me with Power Hour. We're going to have a lot of fun tomorrow as well. Come join us. Always live on YouTube. Hit that like, hit that share, tell a friend about it. With that said, everybody have a wonderful, wonderful rest of your day.
Take care, team.